Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. Crude prices in a holding pattern after falling below pre-Iran war levels last week, as OPEC Plus countries agreed to boost production. But the ECB's Gabriel Makhlouf tells CNBC that won't be necessarily translating into immediate inflation relief.
We know inflation is already in the system, and the fact that oil prices have fallen doesn't mean that inflation is going to disappear. So we need to continue to keep a very close eye on what's happening.
From Chinese competition to US tariffs, EU Industry Commissioner Stéphane Séjourné tells CNBC the bloc must defend its strategic interests in the face of mounting geopolitical challenges.
We have sectors facing unfair competition, and we're dealing with American tariffs, which we didn't want. Each sought to defend their own economy by re-industrializing. Europe's reindustrialization will also depend on defending its economy in strategic sectors.
EasyJet reaches an agreement in principle with Castle Lake, the US investment firm due to acquire the budget carrier in a deal valuing it at up to £5.5 billion. And a red card controversy. US President Donald Trump personally thanks FIFA for lifting US striker following Balogun's red card ban, prompting anger from Europe's federation. Meanwhile, England and Norway fans rejoice following their country's World Cup heroics.
Welcome to another big trading week, and we kick off the start of trade on Monday with another big deal in the media sector. Consolidation is the name of the game in the content world, and the latest is that ITV has agreed to sell media and entertainment business to Sky for up to £1.6 billion. So first up out of the gates, this deal rolling across the wires, £1.2 billion initial cash consideration payable at completion. Plans cash return to shareholders of around £950 million. That's 25p per share. Contingent cash consideration of up to £200 million payable in the second half of 2028. The deal expected to complete by the second half of next year. So still some way to tread in terms of completion here. The latest Sky to pay £80 million break fee if the regulatory conditions are not satisfied. So it's quite a significant fee there if things do not progress. And 11.5 million break fee is to be paid if Love Productions acquisition not approved. So clearly some regulatory hurdles seen at various different pieces here. And there's no doubt consolidation is happening. We're seeing it through the lens in the United States. Major studios, major interests that have been consolidated, but also demerged. If you look at our very own network, big demerger that took place. So I think there's a real revaluation of assets. And if you look at how the basket of media stocks have traded this year, it has been quite volatile. There's been a real lack of interest as the stocks in the media basket had declined quite rapidly. And then there's been some buying back on different news flow. You've actually seen a little bit of interest come back into the equation. So what this consolidation does for the broader sector this morning could be somewhat fascinating.
Yeah, and I think it's sort of very it's a very telling sort of temperature check on the situation in the industry, where traditional viewing of linear TV is losing ground to streaming services, particularly when it comes to the entertainment sphere. And in order to survive and navigate that, we have had talk of this consolidation, this deal, rumours between Sky and ITV for some time. Recent headlines include Sky pledging £2 billion to ensure that some viewer favourite shows will continue after the takeover. But of course, any sort of deal like this will raise questions about which bits they see as profitable, which bits they see as worth investing in, and which bits they see as worth keeping. Because, of course, the ripple effect through to the wider sector and the jobs market, the industry, has come under pressure. People working there, particularly freelancers, talk about the pressures they face now in the industry as things have been cut back.
Something that hasn't been said. We've been talking at length about the amount of services we're all signed up to, and there was a view that we would take a rational approach to some of those subscriptions. That's kind of been coming through. There's been a cost of living crisis that has morphed from one to the next over the years. So I think people have taken a rational approach to their streaming services, subscriptions. But there's another big subscription around the corner. That's AI. I mean, how many AI subscriptions are we required to have now? You're getting the first approach where you can, use ChatGPT. You start to bump up against a firewall. Same with Perplexity. You start to bump up against some sort of you need to pay for subscription services beyond that. So there is another subscriber universe coming. And what impact that has on the content subscriptions will be fascinating from here. But you've already got an industry that is moving aggressively, I think.
Yeah, and I think what you point to there is a really valid point, because you have a situation where the disruptors potentially then become the disrupted. The streaming services that shook things up then find themselves, as you say, feeling the ripple effects, the downstream effects, the fallout of people putting a bit of their money aside to pay for the AI services that they've become so used to having for free up until that point.
It's a great way of putting it, because the life cycle of a disruptor is that you do get disrupted at some point too. Let's push on to what we've got out of the Asian markets. It is a huge week for semiconductors, and this is the epicenter for some of those memory chip plays. Watching very closely the likes of Samsung, as it reports later this week, and SK Hynix, that has been chasing a listing through the United States. So this is the picture. Japanese stocks are down, along with the South Korean market. Retreat for those two tech-heavy plays. The reversal there matched by some green moving on to the Hong Kong market. Also around Shanghai, up 0.2%. So real mixed trade across on those Asian markets. Don't forget Wall Street was shut for the 4th of July holiday. Independence Day, the Friday trade was not part of the picture, so a lack of direction too as we get going for the Monday session. European markets on the back of that, as we saw Friday, there was still some momentum that came through, particularly around German stocks. We climbed about 0.75%. This morning, more tentative again, perhaps that lack of direction that we've got from the US plays. But so far, the 50, stocks 50, are called a little bit weaker, and across the board, we've got some geopolitics on the cards this week, NATO meetings. So we're looking to see what impact that too has in terms of market psychology. I want to take you to US futures, the early picture stateside. This is the early glimpse that we're getting. Does seem to be inclined higher, and tech plays in particular in focus. I mentioned the earnings roster that we're going to get thanks to Samsung. Markets last week very bumpy again around the semiconductor plays. Some fairly strong moves just in session before we wrapped up that Thursday trade. We were down 4.5% on the VanEck semiconductor, so clearly looking for some direction on the earnings there. Let's get to Matthias Heim, who is the CIO at Bell Capital. Matthias, thank you so much for joining us today.
Great to be with you.
We're just trying to set the scene around semiconductors. I feel like we are seeing the market incredibly bumpy and volatile around the semiconductor trade. They're worried about CapEx, they're worried about the Federal Reserve, what central banks may be doing, and they're worried about how long the cycle is in terms of ordering for some of these high bandwidth memory chip plays. What do you think the significance is of what we're going to hear this week?
Well, I don't think the rate decision or the central banks have a lot to say in this market trajectory. I do think it's very fundamentally driven. But the one thing I want to highlight is, if you look just back past 1 year, there's been a big divergence in what you would call the AI CapEx beneficiaries as a whole, which have been great performers. On the other hand, the hyperscalers, the ones spending the money, have been quite lackluster, and I do think that picture tells you there's been some economic leakage being priced in, because in the end, economics have been very strong at the receiving end of investments, not so strong at the spending end. And that might imply that there is some worries around how strong that trajectory will be, or whether we will see going into the next 1 or 2 earnings season some wording which points towards at least a peak in the growth rates of these CapEx investments.
It's somewhat rational to see investors take that approach, that they think that there are some risks they priced in where they priced in. The fact it's actually baked into some expectations is welcome, because it does push back against the narrative of bubble-like territory across on markets. What the question I think is left now for investors is whether some of that lackluster appetite, fear factor creeps into the semiconductor space where it hasn't been so far. Do you think that's what we're watching with these extreme moves, or is that just leverage?
Well, I don't think yet. I do think the fundamentals still intact. The one thing which I think is a bit worrying is that the massive derating we've seen with the hyperscalers, they're now trading at the relative price to book ratio versus the overall market, actually lower than the trough of 2022 post the big interest rate cycle, and I do think that derating could be unsettling at some point. And let's be very frank.
Sorry, derating unsettling in what sense? You think it carries across to the broader market?
Yeah, exactly. Because in the end, there needs to be profitability at the spending end. These hyperscalers need to have a quite decent return on investment. Otherwise, there will be a slowdown. And I do think that's sort of somewhat creeping into markets. I don't think it's necessarily very frightening yet, but it's something to watch, yeah.
Matthias, in terms of where we are with the inflation picture, oil prices have come down. They're not far off their pre-war levels. The jobs print for the US was much lower than expected.
Right.
Those fears around a rate hike seem to be dissipating slightly. What's your take on it and the positioning investors should be moving towards in light of these latest changes?
Yeah. So, in my opinion, oil prices never were that scary in the first place, because oil doesn't matter that much anymore for the overall economy. It was always very contained towards the energy space, also the inflation push we have seen on headline. So I don't think there's necessarily a fear, or never was really a fear, that we're going into a prolonged rate hiking cycle which could then derail the equity market picture. Because let's be very clear, inflation as such, slightly higher inflation, is never a problem for equity investors. It becomes a problem once this inflation is start to be sort of attacked by central banks by raising interest rates in a prolonged fashion. But that's not necessarily the picture here. We do see the current relief on oil prices as very welcomed. We think that disruption is fading away. A lot of the Asian economies will fare better. A lot of other oil importing countries will fare slightly better. So we do think we're at actually probably the trough in economic growth, and economic growth should rebound slightly from here. Same goes for the US, where we have seen quite a contraction in real wages simply because headline inflation surged and the wage growth was quite steady. We do think that's going to reverse into year end, and so the consumer actually now feels quite bad. Consumer sentiment is trough, but that should actually improve as we move into the back end of the year and into next year.
And then in terms of the sort of the coming quarters, coming half of the year, where do you see the sort of opportunities lie? Because we've had such a strong earnings season, and you know, that has in some cases pushed valuations quite high. People may have feel they've missed the boat on some of those opportunities. Where are the opportunities to come? Yeah,
sure. We think there's a big opportunity still to broaden out your equity exposure. So far, a lot of the strong gains have been AI related, CapEx beneficiary related. But then again, look back just 1 year or year to date, regional banks or just US financials in some part have been very strong. And that is sort of the underlying confirmation that we could see a broadening out of economic activity. So we still like US financial being on the banking side, be it on insurance brokerage, specialty insurance. We think there's plenty of opportunities there, which are, by the way, nowhere near as pricey as some of the areas where the margins have been rising for quite some time.
And then in terms of what we heard from the central bankers in Sintra, what was your take on the outcomes of that?
Well, I think there's some cautious talk around inflation, which I do understand. I do think the current picture is actually fairly balanced. We think inflation as a whole is not a big concern. Actually, Europe, we assess the picture slightly different. We think when we do have a growth problem, we don't have so much of an inflation problem. So the policy mix at the moment is not that favorable in Europe. So rising interest rates in an already weak growth environment, that's probably not the best policy mix. So we therefore have still the US as the main equity market for us, and also for the foreseeable future.
Just to your point around that, though, it looks from the Europeans' perspective, you start charting what happened over the past week, that some of those diversified trades came on into Europe, and they went back to some of the usual areas. You saw it in the banks, you saw it in some of the industrials, chemicals actually bounced as well, autos was left behind. But there isn't a feature there where the DAX is now on the front foot, it seems. FTSE's picked up and broken out of a range.
Right.
Do you think this has got further room to run purely based on the diversifier theme?
Well, to some degree, but in the end, we're in an earnings-driven market. In the end, earnings growth will define what's going to perform over the next 12 to 24 months. And there, just one big element which is still lacking in Europe is the deregulation push, which we see in the United States. Take financials, for instance. I mean, the deregulation happening on financials in the US will probably free up quite some capital, allow for more lending or share buybacks in an accelerated fashion. We don't see that coming through in Europe yet. So, US clearly in a better position, I would say.
Okay, Matthias, really good to have you with us. Thank you for kicking off the look at the markets this coming week. Matthias Heim, CIO of Bell Capital. Coming up on the show, political intrigue dominates the conversation in Aix-en-Provence ahead of a court ruling on whether Marine Le Pen can run in next year's presidential election. Plus, Iran and Greenland threaten to overshadow a crucial NATO summit. And as US markets get set to reopen after a long weekend, we'll get you set up for the week with Raymond James Investment Management's Chief Market Strategist, Matt Alden. All of that still to come on the show. Welcome back. Inflation is already in the system. That is the warning from ECB Governing Council member and Central Bank of Ireland Governor Gabriel Makhlouf, who told CNBC that price pressures are not going to disappear despite the recent slump in crude prices. Speaking to Charlotte, Makhlouf advised caution on developments in the Iran conflict.
We should just be careful about reading announcements of the end of the war or announcements of, deals. We should just wait to see what actually happens. So certainly the fact that oil prices have gone down is a positive thing. But we know our June decision, where we raised rates, we know inflation is already in the system. And the fact that oil prices have fallen doesn't mean that inflation is going to disappear. So we need to continue to keep a very close eye on what's happening.
A Paris appeal court will tomorrow decide whether Marine Le Pen, leader of the National Rally Party in France, can run in next year's presidential election. Le Pen, who's currently topping opinion polls, was convicted in 2025 on embezzlement charges and barred from holding public office for 5 years. The appeals court will decide whether to uphold the conviction. If it is upheld, Le Pen has pledged to support her protégé, Jordan Bardella, in next year's presidential race. Well, the vote next year was top of the agenda in Aix-en-Provence over the weekend, with several potential candidates appearing at the economic conference. Also appearing at the conference, our very own Charlotte, and she's back and joins us now. So many conversations we heard you having there, and so much for them to get their teeth into.
Yes, and certainly it looked like the French presidential election was very much top of mind. All the potential presidential were really attending the conference. It really shows that the campaign is on. We will only find out who the next president is on May 2nd next year, but certainly it looks like they're all throwing their names in the ring, whether it was François Hollande, the ex-president, Bruno Retailleau, the ex-interior minister, Gabriel Attal and Edouard Philippe, two former prime ministers of Emmanuel Macron. They were all there, including, we heard, the prime minister, Sébastien Lecornu, potentially kind of indicated that he might throw his name, and Christine Lagarde saying that she's keeping an eye on the domestic situation and that, you know, she's not ruling out potentially ending her mandate at ECB earlier than expected. So, you know, it's all up for grabs. And that's because, of course, Emmanuel Macron cannot run in another election, and it's not clear who might be the heir, while the far right, of course, is leading in the polls. Here again, we don't know who might be running because of what you were talking about, the appeal court decision tomorrow. So it's all up there. Certainly one other person that has thrown his name in the race is Dominique de Villepin, who was prime minister between 2005 and 2007 under President Chirac. He faced some huge protests at the time because he tried to put in place some reforms around some employment laws, certainly some echoes to Emmanuel Macron. He was also foreign affairs minister during the Iraq war, so he stepped away from politics for around 20 years and came back just last year, forming his own government called La France Humaniste. So when I had a chance to catch up with Dominique de Villepin in Aix, I asked him whether his comeback to politics had anything to do with the big election next year.
It has a lot to do with the elections and the difficulties we are facing. France is currently facing many challenges, and we need to get ready. That means not only to have a project, but also to have a party organization in order to compete in those next elections. And I think that the challenge is very high, because the risk we are facing in France is to have the Rassemblement National being in a position to win the next elections, and for the first time in our history. And that will be, of course, very damaging for France, but also for the European Union, because it will send a very bad signal for all the liberal democracies in the continent.
One of the reasons the far right is in the lead in the polls, of course, there's a rise of populism globally, but there's also the French political fragmentation. And you decided to create your own party rather than rejoin your old political family. Do you think this fragmentation is dangerous and here to stay in France? It has created a lot of instability. Is it here to stay?
Well, I think we are facing two different types of risks. The first one is polarization. And we have the far right and the far left, who are quite high. Of course, the far right is very much dominating the game. But the far left is also quite strong, above 50%. So the question is, how are we going to be able to unite the rest of the different parties? And for that, we need to have some kind of a competition of ideas. Currently, we cannot compete without having a strong vision of the changes that need to be done. And of course, many current leaders in the Bloc Central, what we call the Bloc Central, are coming from the Macronist party. They are the heirs of this political party. So we need to rejuvenate the game and the party, and that's why we are coming with new ideas in order to transform the perspective. But at the end, you are right. At the end, we need to have some kind of a unity to confront with the Rassemblement National and La France Insoumise.
And I assume you think you're potentially the man that can unite all these blocks in the middle?
The question is where to stand the best to be able to unite all the different groups. I think many do think that standing very strongly at the right may be the best position. I believe that you need to, if you want to assemble, you need to have a position where you can be listened from the left as well as from the right. When General de Gaulle, at the end of the Second World War, wanted to reunite, he did not ask the people to join him and to forget about their own ideas. But everyone was coming as it was, as a communist, as a liberal, as a Christian Democrat. So whoever wants to join needs to join, not forgetting his own ideas.
That was former Prime Minister Dominique de Villepin speaking to me about the next presidential election. He might be one of the names in the run there. Of course, all the conversations in X were also about European competitiveness and sovereignty. And I had a chance to catch up with Stéphane Séjourné, the Executive Vice President of the European Commission. While in X, of course, he has been working since the beginning of the year on the Industrial Accelerator Act. It was proposed back in March 26. That aims to boost the industrial manufacturing in Europe to around 20% of EU GDP by 2035 from around 14% currently. And so there's some controversial elements to this piece of legislation, including the Made in Europe element to it, which means that some parts have to be made in Europe in some key technologies, including renewables, batteries and cars, to benefit from government subsidies, as well as from some European procurement elements as well. So some are worried that it might be too protectionist. Others said this is a pragmatic approach. So when I sat down with Stéphane Séjourné, I asked him whether he was surprised that this piece of legislation was so controversial.
Oui, c'est à la fois difficile parce que c'est un changement de doctrine.
Yes, it is challenging because it represents a shift in doctrine. First, but at the same time, it's highly anticipated by many economic players. The proof lies in the fact that here in X, a large part of the business community is eagerly awaiting this legislation and even wants to expand its scope to cover several sectors of the European economy. So we have at the same time some political reluctance, but that attitude is gradually shifting across Europe. I believe value chains are being disrupted all over the world and we must respond as Europeans. And there's great expectations from the business world.
And yet we've heard some critics saying that yes, it is a paradigm shift, certainly, in principle, but it's a paper tiger in practice, this legislation. What do you say to that?
Moi, je pense qu'en pratique, il faut être pragmatique.
I believe we need to be pragmatic. We have sectors facing unfair competition, and we're dealing with American tariffs, which we didn't want. Each sought to defend their own economy by re-industrializing. Europe's reindustrialization will also depend on defending its economy in strategic sectors, such as clean tech, automotive and construction, as well as parts of the chemical industry, which is the industry of industries in Europe. In short, regarding all these sectors, we must be pragmatic and also consider the international landscape.
And on this question of unfair competition, we know we saw this joint communique between the EU and China recently, the first one in many years, reopening talks to try to rebalance the trade relations. And yet it looks like a battle is looming with China very soon. How do you position yourself in a strong position against China?
Je pense que d'abord, il y a un sujet de méthode et de crédibilité des Européens.
First, there's the matter of method and credibility from the Europeans. We must stand united and be able to use our trade defence instruments to establish that credibility. So for now, Europe needs to demonstrate that it's prepared to close its market when fair competitive conditions are not met.
L'Europe est prête à permettre justement.
Europe is prepared to allow the use, notably at the Commission, of tougher trade defence tools. And so we're currently working internally at the European level to have that credibility. In a second time, we will need to reach an agreement that balances trade, and so we need probably some level of interdependence. But today there's such an asymmetry in our dependence on China that it's no longer sustainable for the European economy.
Of course, some critics of this Industrial Accelerator Act, they said that will create some extra red tape at a time when there's some calls from deregulation. So this Made in Europe element is adding some red tape. Also argue, the elements like forcing some foreign investors into joint ventures and some intellectual property transfer. That this is, very, very much putting some hurdles into investment into Europe. So, there are discussions that are continuing. The consultation is ongoing on this, and trying to get different countries on board. We know Germany is a little bit more reluctant with it. So waiting to see what that means. But here again, really interesting to hear on the upcoming battle how Europe is a question of being credible when they're putting their stance and ready to use some tools against China if necessary. So it's not protectionism, it is very much pragmatism that the Europe needs to do what the US and China are doing as well. So really interesting to hear there from the Executive Vice President of the European Commission from X, where all the talks was about European strategic autonomy and sovereignty as well.
That is fascinating, the interpretation, because there is a view in the States and in China when homegrown talent are pushed forward that is positive for scoring home goals. But here we're talking about it just being another layer of regulation that companies see as another negative when these companies push forward. Charlotte, thank you very much for joining us today with the latest update there. What we've got on futures this morning as we gear up for the Monday trade, we're looking a bit soggy at this hour. Don't forget the US out of action for Independence Day, so we didn't get a trade Friday. So perhaps lacking that steer from the US markets, seen down on 50 futures at this hour. And welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. Crude creeps higher despite OPEC Plus producers rubber stamping another upward hike. The ECB's Gabriel Maclou telling CNBC that any price softness won't translate into immediate inflation relief.
We know inflation is already in the system, and the fact that oil prices have fallen doesn't mean that inflation is going to disappear. So we need to continue to keep a very close eye on what's happening.
From Chinese competition to US tariffs, EU Industry Commissioner Stéphane Séjourné tells CNBC the bloc must defend its strategic interests in the face of mounting geopolitical challenges.
We have sectors facing unfair competition, and we're dealing with American tariffs, which we didn't want. Each sought to defend their own economy by reindustrializing. Europe's reindustrialization will also depend on defending its economy and strategic sectors.
EasyJet reaches an agreement in principle with Castlelake, with the US investment firm set to acquire the budget carrier in a deal valuing it at up to £5.5 billion. And another deal making ITV announces the sale of its media and entertainment business to Sky, in a deal worth as much as £1.6 billion between two of the UK's biggest broadcasters. Let's take a look at the Asian markets in session this morning, and it feels as though a number of these markets waiting for fresh evidence on the earnings. What we've got coming this week, Samsung out with numbers later on. We're watching that very closely to see whether there's any change in this huge demand cycle that's been playing out for chips. So that is closely marked by markets. And don't forget SK Hynix too, looking to launch a US listing today. So again, as semiconductors display what the earnings profile looks like, you've got another big player coming to the markets and this is the biggest player in South Korea, SK Hynix, looking to test that appetite stateside. And what we've got, Japanese stocks, South Korean names, just very cautious at this hour. So again, the point around fresh evidence, this could be a fairly interesting week for the semiconductor space. What we've got elsewhere, a little bit of green still on the Hong Kong market. European futures, though, looking to follow most of those Asian markets into the red. US was out of action Friday, so not getting that direction from our US counterparts, but we are seeing down across the board, just very modest territory, so almost like a holding pattern. Don't forget, last week we were much stronger. We broke out of ranges here in Europe. We escalated to fresh records on the Stock 600. We saw the DAX also climb significantly. Friday session was another 0.75%. So it felt like there was fresh appetite back for European stocks last week, which has not necessarily been the case with this US exceptionalism story that has been playing out in 2026. Now, let's just take a look at those US futures. The pictures were wrapped up shop on Thursday, a little while back now, before the Independence Day holiday. We had the Dow climbing again to fresh records. We're up more than 1%. We saw over the course of the trading week that the S&P 500 also made some territory, not in the Thursday session, but was up 1.75% for the trading week. And when it comes to the Nasdaq, that's where some of the volatility has been concentrated. We're looking for some green to return to the boards this morning, with actually the leadership to come through from the technology space. Ben.
Let's have a check-in on what's happening with oil, and prices had drifted lower after that announcement from OPEC to ramp up output for the month. But they are, well, US crude has drifted above the flat line, still below $70 a barrel for the August contract, and Brent fairly flat at the moment in current trade. There'd been little change, the prices, last week after having mostly fallen the past few weeks. So we're seeing there a little more optimism around the situation in the temporary peace, the ceasefire between the US and Iran. Let's get into it in a little more detail, because 7 of the OPEC Plus producers agreed to raise production targets by 188,000 barrels a day in August. It is the 5th such hike since the start of the Iran war. The decision comes as transit through the Strait of Hormuz continues to recover, but remains firmly below pre-war levels. Janiv Shah, Vice President for Commodity Markets and Oil at Rystad Energy, joins us now. Janiv, very good to have you with us. What do you make of this move by OPEC? And, of course, it doesn't now include any moves by the UAE, which we understand has also ramped up its output.
Absolutely. Thank you. Good morning. Thank you for having me on this program. I think there's much to be said around this. Of course, it's nearly 950 or 1,000 barrels a day, or nearly 1 million barrels a day of additional supply that OPEC Plus have unwound since the beginning of the war. But all things considered, that's amounted to nearly not much, if anything, just because of the lack of export availability through and transiting through the Strait of Hormuz. So that is something that is reopening now. Of course, we've seen a huge number of tankers and volume actually exit, not just crude, but also some product tankers as well, which puts a little bit of a dampening of downside potential risk on prices. Of course, as this wave of supply begins to hit or just be exported in the first place, that is something that will allow supply to ramp back up in the Middle Eastern countries themselves.
And so, Janiv, as I was coming in this morning, I was slightly astonished to be reading an article talking about a potential supply glut. And that's based on the fact that levels of oil leaving the Strait of Hormuz, now not quite anywhere near pre-war levels, but enough to have relieved the pressure on global markets, so much so that some analysts are forecasting oil as cheap as $60 a barrel by Christmas.
Well, there is, of course, an art to that forecasting method, especially when it comes to oil prices. Nevertheless, we do see something similar in the form of a supply glut, potentially on the horizon. We're moving from a crisis mode into a bit of a comfort period, is what many analysts may call it. And our balances look somewhat like around Q4, a bit of an oversupply coming into the global market. And that is very much centered around the ramp-up pace of exports out of the Middle East, as well as supply ramp-ups themselves. When it comes to prices, our firm's view here is that we're not looking at around $60 a barrel by the end of this year. But of course, that is a very rapidly changing scenario that we are revising, very frequently and often. But of course, much of this depends on how the demand side of this picture does unfold in the next couple of months. Of course, it is summer peak transport period.
Yeah, and indeed. And with that in mind, just going back to the supply side, it seems like quite the whipsaw, given the IEA was warning of the biggest energy price shock in living memory, and yet there's now this talk of a supply glut later this year. How does that come about? What has changed so dramatically?
Well, you know, we've gone from a very oversupplied market and a bearish scenario forecast at the beginning of this year, what would happen throughout this entire year's time period, when we've gone from that to a huge supply crunch, right? A lack of supply and lack of exports from the most important in terms of exporting region to Asia Pacific, which is the most important importing region, in China specifically. So that's where we've seen the dated front line, so essentially the physical premium versus what the paper markets were, exceeding and extending to their highest ever, right? The dated front line was $40 or $50 higher. Now that has essentially come down to parity, but that really shows that the physical market is unconstrained, and there are a lot of supply barrels that are still coming online. You know, we've got this SPR releases that are still ongoing, and we've seen structures, Brent, WTI, and of course Dubai, flipping into contango, which essentially shows that there is a lack of prompt demand, as the demand centers are still working in somewhat of a mindset of a war scenario, right? So that is something that we are forecasting to really kick and will, you know, pull a lot of demand up in the absolute short-term prompt.
Jennifer, if I could just talk about what we've heard for a long time, which is that, look, the oil price is not going to come down rapidly this time on the back of any resolution, because it's simply got so many different factors at play here. And you've got countries that may want to stockpile, so we're going to be elevated for longer. So the $60 scenario that Citi is spelling out seems highly significant. What would cause selling into any summer rally, though? And that is the question that dangles as to how do we get to 60. The ship counting, that exercise that everybody's been embarking upon in the last number of months, what are we up to 160 vessels through the Strait of Hormuz from Monday to Saturday. How significant are those shipments in terms of the overall picture?
They're extremely significant, to put it shortly. You know, the quicker that these cargoes clear and are exported into the global market, of course, they may not have many takers. You've seen a lot of cargoes idle off the coast of potential takers in the form of refiners or end product users. But the quicker that they are sort of evacuated from the Middle East Gulf, the quicker the fresh cargoes that are unladen, you know, ballasting vessels can re-enter, and firstly enter and then re-enter to pick up more cargoes, and that will really accelerate that supply availability. So yes, there is of course cause to see a 60 or in the 60 to 70 range of Brent. Of course, TI is in that range already, but that depends on how quickly that demand market hits. But of course, you know, the quicker ramp up that we are hearing signals from Middle Eastern countries and individual assets themselves does point towards a bit more of a bearish stance as opposed to bullish at this point in time.
So, Jennifer, the psychology that we're going to be left with for a lot of countries that were concerned about not having stockpiled enough going to this crisis, or if they stockpile, they want to replenish just in case we go back into a situation where oil is a precious commodity again. How do we think about that? Because you just mentioned still the release from strategic reserves. If we're at a 60 handle, surely the stockpiling incentive is back.
Absolutely. And we're seeing a huge amount of signals from not just countries, even individual companies and governments themselves, that they're likely to think about the strategic petroleum reserve stockpile level capacity, also building out new capacity, such that if there are any more shocks, you know, we can look at, you know, Strait of Malacca is a potential that is we're hearing whispers about, that the market's getting a little bit jittery in that sort of toll phase as well. But, you know, just to guard against these types of global events that are really putting a sort of a crunch on the domestic element as well. But not only that, you know, so a lot of countries diversifying their export availability and potential such that they're not solely required to rely upon one method of transport. So we are seeing a lot of pipeline potential build outs, especially through the Middle East, into different regions, into different routes. That'll allow some diversification and a lack of risking.
Jennifer, I just wanted to follow up on that point around the Strait of Malacca. I mean, this is one of the most pirated straits in the world. Typically, that's anyone in shipping circles knows that. But in terms of some sort of toll booth there, if that is what we're now left with from the Strait of Hormuz and whether it flows across to other jurisdictions, I mean, how are you pricing that? How are you thinking about the possibility of that even happening at this stage?
very many, of course, governments, entities, and everyone else involved to discuss that. I think part of the reason here is if we see a potential toll booth with Iran sort of enacting upon the Strait of Hormuz, is that something similar could be enacted upon others. And of course, the most important from a volumetric perspective, as you just mentioned, is the Strait of Malacca. If you consider how much volume goes through that period going into Singapore, not just on crude, but also on products, if you consider the fuel oil and naphtha space going into the shorts of the Asian market, as well as everything that's flowing out into the Chinese space, if you consider from that route perspective. So the way that it will be enacted, of course, I'm unfortunately unable to share a little bit more on that, but it probably will take a lot of time because it is, from a volumetric perspective, significant.
Janiv, just want to get your thoughts on this move by CME Group to open up oil trading more easily to retail investors. There's a lot of interest in the space given the price volatility that has drawn people to it, and this idea of contracts for 10 barrels of oil being available to trade round the clock, 7 days a week from the end of August. Do you think there's a risk with that we might start to see distortions in the price where, like perhaps we saw with the commodity of silver earlier in the year, it's driven by people buying the dip and sentiment rather than actual fundamentals?
Well, this is something we have seen in the last few years, or even pre-COVID, if you think about it, that fundamentals used to control the market, of course, in a very significant manner. And then we also had these sort of geopolitical or extra sort of events and factors which have really controlled the narrative for the last sort of 6 or so years. But, coming to this point here, it is very likely that we are likely to see that a significant amount of interest from non-fundamental players in the market will also add a little bit of volatility. Everyone's going to be looking at it from an individual perspective as opposed to where the fundamentals, the barrels are coming from, going to and flowing, and the route of transfer. Because a huge part of this is not just linked to the fundamentals, but also on freight. And if you think vessels, consider the vessel space, that are extremely tight at this moment. So yes, coming back to that question, it is likely to put a little bit more volatility into the global system, but it does make it a little bit more available for anyone to trade upon this.
Okay, Janiv, thank you very much. Janiv Shah, Vice President for Oil and Commodity Markets at Rystad Energy. Ukraine said at least 7 people have been killed in Russian missile and drone strikes on Kyiv overnight, with 24 injured. Neighbouring Poland, a NATO member, briefly scrambled fighter jets as a preventative measure. Russia said President Putin had a nearly 90-minute call with his American counterpart Donald Trump on the 4th of July, during which Trump offered to help end the Ukraine war. Russia's foreign ministry said Putin congratulated Trump on the 250th anniversary of America's Declaration of Independence and described the conversation as, quote, highly constructive. All of this ahead of a crucial NATO summit in Ankara that starts tomorrow, with members not really seeing eye to eye after the Trump administration's actions on Iran and Greenland. Meanwhile, the US ambassador has warned allies need to hike defence spending to 5% of GDP as soon as possible. Trump is due to join his fellow 31 NATO leaders in Turkey, meeting his Ukrainian counterpart, Volodymyr Zelensky, on Wednesday. European leaders are expected to pledge increased defence spending after NATO chief Mark Rutte announced in June that tens of billions of dollars in arms deals will be signed at the summit. Still to come on the show this morning, it's the biggest share sale since SpaceX. We'll give you all you need to know on SK Hynix's mammoth Nasdaq listing. Plus, European football authorities reportedly plan to issue a statement as soon as today, coming out against FIFA's decision to suspend a one-match ban on a US player after reported claims of lobbying from none other than the president himself. to the latest in the World Cup and, well, some controversy because US striker Folarin Balogun's one-match ban for his red card against Bosnia and Herzegovina in the previous match has been suspended by FIFA for a year. The move, which came without any explanation or justification, followed criticism from the Trump administration and means Balogun is now available to play in the team's round of 16 match against Belgium today. US President Trump thanked FIFA in a post on Truth Social, while the Belgian Football Association said it was astonished by the move. Norway made the World Cup quarter-finals for the first time as star striker Erling Haaland scored twice to spend 5 times winners Brazil home. They will take on England in the last 16 after a dramatic evening at the famed Azteca Stadium. 10-man England securing a backs-to-the-wall 3-2 victory over co-hosts Mexico. Jude Bellingham scoring twice in a span of just 98 seconds before half-time. Away from the football, we are tracking some of the biggest movers in pre-market trade, and EasyJet has agreed, in principle, to a takeover by Castlelake that values the carrier at up to £5.5 billion after rejecting 4 previous offers from the US investment firm. The UK budget carrier said the agreement includes a cash offer of £6.90 a share and would take EasyJet private. Castlelake now has until August the 3rd to make a firm offer or walk away. Uber has reportedly halted the majority of its European food delivery expansion plans as it continues efforts to acquire Delivery Hero. That's according to the Financial Times, which says Uber no longer plans to launch in 5 of the 7 countries previously targeted for expansion this year. Thales has agreed to buy a 35.5% stake in Exail for €134 a share, with the French defence giant planning a tender offer for the remaining shares of the ocean technologies firm. And as we've been reporting this morning, ITV will sell its media and entertainment business to Sky for £1.6 billion, with Sky agreeing to enter into a content supply agreement worth more than £2 billion over the next 5 years. Karen.
Let's talk about semiconductors. Samsung Electronics is expected to announce an 18-fold jump in Q2 operating profit to a record high. The South Korean chip maker is likely to estimate an operating profit of more than $56 billion tomorrow amid a prolonged memory shortage. The world's second largest chip maker, meanwhile, SK Hynix, is set to launch a US listing on the Nasdaq to raise around $28 billion, according to regulatory filings. The deal is expected to be the second largest share sale after the SpaceX IPO last month. So another company testing the fever for AI. And will it be successful? I mean, $28 billion is still a large chunk to raise. Keep in mind the stock, and this is to me significant, the stock is up 273% this year. So who is a buyer in a market, even if you think that there is a rationale for some of the price action, who wants to be on the hook for the 273% increase that has transpired already? The question is what lies ahead and what is not really baked into share prices. And I think this is the other piece of the picture. This is where Samsung comes into the equation, showing investors what it thinks the timeline is going to be looking like. Don't forget, it has also been raising money. It has been locking its customers into a supply chain for 5 years so that they place the orders, they're on the hook for those orders while it builds out the capacity. And so far what we've had, now DRAM, this is the estimate from Citi, that DRAM prices were up 44% in the quarter and that NAND prices were up 53% quarter on quarter. So how much of that continues along from what is an expectation that we have an undersupplied market through to at least next year? What happens after 2027, I think, is the dangling question that the companies themselves, investors, research analysts have yet to try and answer.
Yeah, that figure you mentioned about how much SK Hynix's Korea-listed shares have gone up over the last 12 months, 700%, sounds impressive, but my goodness, it almost looks quite feeble when you compare it to SanDisk, for example. In that same time, 3,600% increase and counting. Western Digital up more than 700% as well. And if you look at the index that tracks semiconductors, Philadelphia Semiconductor Index, 125% over the past 12 months. But I think the question is, will that enthusiasm continue when you've seen the hyperscalers go from funding their build-out using some of their cash piles, and now they're turning to equity and in some cases bonds, debt market to fund that build-out. If that starts to wane, then the profits for these chip makers, that's where the tap may start to, instead of gushing, may start to be, who knows, maybe more of a trickle? And has SK Hynix missed the key bit of that momentum by the time it gets onto the NASDAQ, or is there still more to play out? I think that's the big question.
Well, for me, there are a lot of investors. You just mentioned one of the index trackers. There's many. Right, there are many semiconductor index trackers, and the reality is these stocks, gigantic names in the Asian market, are part of those trackers, and some of it comes with leverage. You've got 3 times leverage products that a lot of investors, retail investors, have been trading very aggressively, which is why these big sell-offs in Asia have been met with very significant drawdowns in other places across technology. There are all interconnections already, so how much more of these stocks do US investors want at this stage when they're already holding the product? That's the question I would have. But other variables too. I mean, Samsung, they had a wage deal that was struck in late May. It allocates 10.5% of the company's operating profit in special bonuses to employees of the company. It's over at Samsung. So how much of that profitability gets taken out and sived off elsewhere now? So there are lots of different variables, I think, away from just the demand story that may have an impact on what shareholder returns ultimately look like from some of these companies. We're going to park that there. We're right up against the market open now. Some of the indications have been for a weaker start today as we just settle into a wait-and-see pattern ahead of US markets to reopen later on today after a long weekend. Welcome to Squawk Box Europe. It's 8 a.m. here in London, 9 a.m. CET, and stock markets across Europe are opening up for trade We're closely watching the geopolitics. There is oil moving through the Strait of Hormuz and OPEC Plus agreeing to increase output targets, oil price drifting off. Markets closely looking at semiconductor stocks, as well as we have the likes of SK Hynix chasing a US listing and Samsung revealing earnings this week. So there's a lot to play for in the risk-on scene this morning. But as we get going, it is cautious, as you'd expect, given the US was out of action Friday for the Independence Day holiday bin.
Yeah, let's drill down and look at some of the detail and how the sectors are moving, and quite a few interesting moves in that space that, well, they've sent travel and leisure towards the top of the board of gainers up 0.8%. That news we were reporting about EasyJet agreeing in principle with that deal with Castlelake after several weeks, months indeed, of talks. But just pipped to the post at the top of the board by automakers there. That basket of stocks advancing almost 1% in the first few moments of Monday trading. Media stocks advancing as well. Again, big moves in that space as we've been reporting with that deal for Sky to buy up ITV's entertainment and television business. Insurance as well, also up almost 0.4% there. To the downside, and this is where we're seeing the biggest drag, and it's utilities, which is currently the sharpest faller, off by more than 0.2%, well, 0.2% there. It had been one of the big gainers in the Friday session, along with construction and industrials, but giving up some of that ground this Monday morning. Basic resources off by more than 0.5% there. Telecoms as well, giving up some ground, and tech, again, one of those that had advanced in the Friday session, giving up some of those gains this Monday morning. That's the sector-specific moves. Let's have a look at how things pan out regionally. And this is the picture across the main benchmarks. No huge shakes there as we start Monday morning. All of them just a whisker above the flat line. The Italian MIB, though, advancing more than its peers. The DAX seeking some direction there, hovering around the flat line. But of course, there was no Friday trade in the US. It had been closed for the Independence Day public holiday. So as we saw in Asia, European markets really trying to find some direction this Monday morning. We will continue to track them and let you know if they do. Karen.
Better performance than we had expected based on futures, though. Let's get to EasyJet, and this is the reaction. Actually, not seeing one yet in the stock. It's agreed in principle to a takeover by Castlelake that values the carrier at up to £5.5 billion after rejecting 4 previous offers from the US investment firm. The UK budget carrier said the agreement includes a cash offer of £6.90 per share and would take EasyJet private. Castlelake now has until the 3rd of August to make a firm offer or walk away. And in other deals, ITV will sell its media and entertainment business to Sky for £1.6 billion, with Sky agreeing to enter into a content supply agreement worth more than £2 billion over the next 5 years, seeing ITV stock get down slightly in initial reaction today. Thales has agreed to buy a 35.5% stake in XL for €134 per share, with the French defence giant planning a tender offer for the remaining shares of the ocean technologies firm. Let's get some thoughts on the market. Joining us now is Marina Zavalok, who is the Chief European Equity Strategist at Morgan Stanley. Marina, great to see you again. Thank you very much for joining us.
Thanks for having me.
We've been discussing from the outset this morning a very benign scenario that Citi now sees for the oil market, calling 60 on Brent by year end. This is quite different to all the conversations we've had for many weeks, where the expectations are that we get higher for longer on the oil price, which of course would be still posing some headwinds for European stocks. If we are going to talk about a much lower price settlement for oil, what does that mean for the potential for European stocks, and is it likely?
Well, we have our oil strategist has a bit of a higher forecast, so still above 70. But the analysis that we've done is, if you look at past geopolitical escalation periods, it's very normal for energy equities to basically trade down relative to the market for months after you pass the peak of oil prices, and we're following that exact same pattern. So we downgraded energy equities about a month ago, and we agree with that kind of sogginess.
And the flip side of the trade, because if you look at the FTSE 100, even that downgrade on some of the oil stocks is not taking the shine off what we're seeing on the FTSE.
Yes.
I mean, we've climbed close to 10,700.
Yeah.
It's a significant bounce, the German stock market too last week. So how much upside do you think is coming into Europe at this point?
We have, for Europe overall, to June next year, we have about 6% upside, but we're very conservative because we set that target while we were in the middle of the Strait of Hormuz disruption. So we were conservative with the multiple. we've been flagging upside risk to those estimates. And then to your point, overall energy coming down is good for European equities. We're seeing flows return, not oil flows, but oil flows, and what I mean is equity flows. We're seeing equity flows return to European equities, which was something that wasn't happening during the Iran conflict. And also what we tend to see is, although oil equities trade down, overall earnings breadth in the market goes sharply higher as oil prices fall. That's what we're seeing today for Europe.
In terms of one of your recent research notes, I know you say your feedback points to rising investor appetite to broaden exposure amid the concentrated positioning and increased volatility in the AI space. Where do you advise them to seek that diversity and broader exposure?
Yeah, so we've been advising from a sector perspective, the number one sector we advise broadening to is banks. And we've been advising that since early April. I still think that trade has more to go. I was mentioning that oil equities tend to trade down. It's exactly the opposite for banks. They tend to trade higher, outperform the market after you pass peak oil prices, and that can go on for a year, for 2 years, because of the steepness of the curve, higher bond yields, stickiness of inflation, even if inflation's coming down, lower recession risks. And then today we have AI adoption that's benefiting the banks as well. Beyond the banks, because nowadays I get asked, I want other sectors as well. Europe's very idiosyncratic, stock specific, and therefore we put out this note with 30 stock ideas. We went to all of our analysts. And it's kind of, in travel and leisure, it will be a couple of stocks. In luxury, it will be a couple of stocks. We prefer stock specific rather than recommending, those sectors in their entirety.
Okay, in which case then, looking at the sort of, I suppose, the broader point, the bigger picture, we have seen the oil price come down significantly from where it was. It's almost back to about pre-war levels now, at 4-month lows. Has that fully filtered through to the performance of equities? And, in the same way we saw, obviously, equities reacted when the oil price jumped.
Yeah.
Have we seen the effects filter through, or is that yet to play out, do you think?
I think it's still playing out. I mean, if you look at European equities, for example, from the beginning of the Iran conflict, European equities inflows, they were really healthy before that, and then they ground to a complete halt. We've seen 2 weeks of inflows, and they've been pretty mild so far. The interest is definitely picking up. I'm getting a lot of interest from investors. We've done a lot of work on stocks very correlated to Strait of Hormuz disruptions, and those stocks kind of inversely correlated. So energy being one that's inversely correlated. If you look if you look specifically, especially at the positive leg, it's trending higher, but very gradually in a choppy pattern. There was a lot of concern about execution. So I think the market will keep breaking higher, basically, bottom line.
So what stocks are we talking about? Because there used to be just a handful of names in Europe that were usual suspects. Every time the market picked up, you go and look at the same handful of stocks. But obviously AI is changing that narrative to an extent. So what stocks are you looking at?
Well, the ones that are correlated to Strait of Hormuz, and it doesn't necessarily match our model, but just trading the reopening itself, most positively correlated airlines, of course, aerospace, banks, construction, semis actually are also correlated, although I think what's happened is the broadening has hurt the semis complex, because during the conflict there was really just one trade, just invest in semis. And there were fundamental reasons for that, there still are, but now that you have more options of what to invest in, I think that's contributing to this choppiness we're seeing in the semis complex.
That's a fascinating point, because you can see it on a daily basis, all that leverage that is baked into the markets, the 3 times trade. It feels like things are bumpier and that there isn't the same level of support now behind that trade. What is it going to take for semis to find that re-engagement? Is it going to take earnings again, or is it done? Do we take the 270% we've had in some of these names, be happy with it? That's going to be the best of it.
I really still like the semis. I think the fundamentals are outstanding. After the parabolic rise that we've had in some of these stocks, a lot of these stocks, I think it's very healthy to have a period of choppiness, of some consolidation, breadth rising. And it's seasonal as well. We tend to have these kinds of periods in the summer. So we're still overweight the semis. We're also calling for broadening. We would hold on to the semis because they're going to break out again. It's just going to take probably a number of weeks. I have a theory that if you watch breadth in the market, it was at lows, absolute lows, as we were coming out of the Strait of Hormuz disruption. And that was around the time that the parabolic rise kind of slowed down in semis. Now we're grinding higher on breadth. We're about a third of the way to peak breadth. I have a theory when we get back to peak breadth, semis will come back. And a lot of the kind of broadening trade will be priced in.
In terms of this week's NATO meeting, how closely are you watching that? Is that going to do much for defence stocks in Europe, or do you think that the reaction there to talk about increasing spending has been factored in and there's nothing more to see?
Yeah, I mean, I'm watching it closely. We downgraded the defence sector for the first time in 3 years, about 6 weeks ago. I think at this stage of the cycle in the rearmament trade, it needs to be more than commitments. It needs to be the actual spending. And what we're seeing in Germany is that the spending is running below target. In general, in Europe, there is a ramp up in spending, but what we're seeing among the defense companies is that the guidance was so high that if anything, we're seeing kind of negative revisions or just no positive revisions, and the market really trades on earnings revisions. We're not getting, defense is not at the top of earnings revisions. So I'm watching it. I don't think it's going to be a major catalyst.
Can I ask you about a whole basket of stocks that we haven't mentioned that typically we would always mention if we're looking at an upmarket in Europe? And to narrow that down, it's household goods. I mean, luxury was always considered some of the premier part of Europe to hold, but it's been difficult. And these are stocks that have been under pressure because we haven't got the same buying out of China, we've not got the same buying out of the Middle East, and not got the same buying out of Russia, quarters of the world that would be significant customers. That said, the industry is changing its stripes. It's not just going for selling a handbag or two these days, it's changing into travel and experiences. How do you think about the potential for household goods and whether the sort of half-staged rally we've seen so far, which has got it nowhere near back to the highs, could actually have more room to run?
Yeah, it's really interesting because going back to that Strait of Hormuz sensitivity, luxury was very, very correlated to the decline. I was thinking it was going to have more of at least a tactical bounce. In our model, our sector model, luxury is at the very bottom. So we split the sectors into 30 parts. Luxury is at the very bottom. It's been at the bottom for 3 years that we've been running this model. And I get asked about it all the time. I think the reason it's not catching a bid is because thus far, the optimism on luxury is kind of a theory. And there's not a lot of, you have some evidence for certain stocks, but in general, in aggregate, there's not a lot of evidence. To your point, the Chinese consumer recovering, no, actually it continues to be quite, the trends in luxury continue to be weak. There's theories about the K-shaped consumer in the US and that benefiting luxury. I think there is a moderate benefit, but not enough to compensate for the Chinese consumer. And then, there's optimism about Korea, for example, in the K-shape there's a very small part of luxury exposure. I think for the most exposed stock, it's like 8% of revenue, so it doesn't compensate. So in general, earnings revisions continue to be amongst the most negative of any sector in Europe. And then you have the second-hand market dynamics. So I think investors will buy into luxury if there's evidence of fundamentals turning. And in general, for the broadening trade, that's what I'm seeing. It's not like the heavily tactically oversold sectors that are rallying. Those are not getting a bid. It's people returning to quality compounders.
Yeah, which is interesting that luxury is not in that mix anymore.
With evidence of that quality. Yeah.
I think luxury is waiting for the tech millionaire and billionaire thanks to the AI trade to turn
where
up.
are they?
Yeah, exactly. Maybe there at some point. Marina, thank you very much for the analysis today. We do appreciate it. Marina Zavalock with us, Chief European Equity Strategist at Morgan Stanley. Coming up on the show, political intrigue dominates the conversation in Aix-en-Provence ahead of a court ruling on whether Marine Le Pen can run in next year's presidential election.
Welcome back. Inflation is already in the system. That is the warning from the ECB Governing Council member and Central Bank of Ireland Governor Gabriel Makhlouf, who told CNBC that price pressures are not going to disappear despite the recent slump in crude prices. Speaking to Charlotte, Makhlouf advised caution on developments in the Iran conflict.
We should just be careful about reading announcements of the end of the war or announcements of, deals. We should just wait to see what actually happens. So certainly the fact that oil prices have gone down is a positive thing. But we know our June decision, where we raised rates, we know inflation is already in the system. And the fact that oil prices have fallen doesn't mean that inflation is going to disappear. So we need to continue to keep a very close eye on what's happening.
The Paris Appeal Court will tomorrow decide whether Marine Le Pen, the leader of the National Rally Party in France, can run in next year's presidential election. Le Pen, who is currently topping opinion polls, was convicted in 2025 on embezzlement charges and barred from holding public office for 5 years. The Appeals Court will decide whether to uphold the conviction. If it is upheld, Le Pen has pledged to support her protégé, Jordan Bardella, in next year's presidential race. Well, Charlotte joins us now with more, and presumably that was one of the many topics of conversation in Aix-en-Provence last week.
Yes, it was. And it's interesting because, of course, the far right is in the lead in the polls for the presidential election, which result we'll have in May next year. But, of course, there's a rise of populism across the world. But there's also an element of French fragmented politics that is allowing the far right to be in the lead, because we don't know who they might be facing in the election next year. And, of course, that's because President Macron cannot run in the election again. He's won it twice. And you have multiple names now that are throwing themselves in the ring. You have former prime ministers, Edouard Philippe and Gabriel Attal, Bruno Retailleau, the former interior minister, François Hollande, the former president, including we have from Sébastien Lecornu, the current prime minister, in Aix, talking about, hinting at maybe he was himself in the race, and Christine Lagarde as well, speaking from Aix, saying that she's keeping an eye on the domestic situation, that she could potentially end her mandate at ECB earlier than expected. So many names potentially in the race. One of them is Dominique de Villepin, who was prime minister under President Chirac back in 2005. He was there for a couple of years, tried to put in place some reforms around employment, around youth employment at the time, faced some huge protests already trying to push his reform agenda. He was also foreign affairs minister during the Iraq war, and he kind of gained a lot of popularity at the time, made a very famous speech in the UN in 2003 talking about incalculable consequences of military action in Iraq at the time. So when I had a chance to catch up with him in Aix, we talked about the situation in Iran and the current situation with the signing of the MOU, and he said that we need to learn the lessons of the past.
We have to tackle all the former problems that we were facing on nuclear, on missiles, on proxies, but we have also to tackle the question of the Strait of Hormuz. So we have all those issues on the table, but I think that the Trump administration is understanding that war is not an option, it's not a solution. Okay. And war is creating more instability, more imprevisibility for the whole world economy. So we need to consider now some peaceful strategy. Of course, it's not easy. We need to go back to the table of negotiation. I think that it will be wise for the Trump administration to consider having Europe as a partner for these negotiations, because we have a strong experience mainly for the nuclear issues, and we know well the Middle East, so we could contribute to the stabilization as well as to contribute to monitor the situation in the Strait of Hormuz. So I think that it is time to take the lessons of what happened in the last month, what happened in the last 25 years. We have not been able to solve any wars in the last 25 years. The new wars are not settled yet. We can see the situation in Iraq, still a very chaotic situation, the situation in Libya. We have, in most of this region, failed states, so we need to take the whole world community the lessons and to go back to a more multilateral world, but this is still a long way to go.
And yet we know that behind all these key issues, whether it's Iran or Ukraine, next week the NATO summit coming up, we're just coming out of a G7 summit, all the background is a relationship with the US. It has been a rebalancing lately, of course, and the threats of tariffs, etc. What should be the relationship of France and of Europe with the US now?
Well, we should still try every day. It is difficult because Donald Trump is well known to change from one day to another, but we should keep trying, and we should keep working for the world's stability. And we have many partners around the world. Many countries in the global south, they want to go back to a strong multilateralism. We need to have some strong common rules, some important common goods. So we know what we should do. But of course, that will be much easier if the Trump administration is opening its own eyes and taking the lesson for the future.
Final question, of course, Mark Carney talked about the question of the middle powers and how they can create an alliance and a counterpower to the US and to China. Is that something that you think is a good idea? This is where we should be and where our strength could be.
I think the Canadian Prime Minister and many others have thought about this alliance of middle-sized countries. I think any type of organization is good. Whatever gives shape to new alliances, to new ideas, is good. But we need also not to forget that Europe has a challenge to be more able to face its own destiny, to take the destiny into its own hands. And we need not to forget, for that, we need power. So we need to take the lesson for ourselves and to get a stronger European organization, stronger tools, not to hesitate to use these tools whenever it's needed.
That was Dominique de Villepin, former Prime Minister of France. They're speaking to me from the Rencontre Économique Dex. Of course, beyond all the talks around the French domestic politics, the bigger topic as well of conversation was around European sovereignty and the strategic autonomy of Europe. And so I had a chance to talk to Stéphane Séjourné, Executive Vice President for the European Commission. And of course, we talked about how Europe has, trying to dynamize the European economy. We had the Draghi report, question of the innovation, how to ignite innovation again in Europe, the Capital Markets Union, and all these elements, try and boost innovation in Europe to boost the European economy. So I asked him, in the light of the SpaceX IPO and the billions of euros traveling to US, how Europe was hoping to tackle and try to bring back that money into Europe.
C'est sûr qu'on a un paradoxe, c'est que on a à peu près 300 milliards d'euros.
We have a paradox. Roughly 300 billion euros flow to the United States to finance innovations originally created in Europe. We would prefer to see these innovations scale up here in Europe rather than in the US. So our goal is to create this capital market, to help this capital flow more easily, but also to leverage public procurement. You mentioned the case of Elon Musk and his companies. The US federal government helped these firms grow by awarding them public contracts. So we have a capital market issue. We're currently fixing it, but we also have a demand-side problem. That's why we're going to reform European public procurement rules to foster a greater preference for European solutions in public contracts.
Can I ask you about AI? Because we know this is the game for tomorrow and how it's going to transform everything. So I'm more optimistic than others, but we know some job destruction is going to happen. A lot of voices in AI are calling for a basic universal income, taxing these AI companies and help give that to support the jobs that will be destroyed. Do you think that's a good idea?
Moi, je pense qu'on doit pouvoir taxer les...
I believe we should be able to tax companies operating within European territories without discrimination, whether they're European, American, Indian or Chinese, and so have the contribution of these companies to European infrastructures which they benefit from, the way of life, etc. At the same time, our goal is to develop a European AI model. That's a separate issue. We need to be able to mobilise capital and investment and even be sovereign on an AI model so that we do not have to become entirely dependent on US providers.
I was going to ask you about that because recently we saw the US administration stopping Anthropic from rolling out their latest model of Mythos. And Europe got really shocked by that. And did it ring new alarm bells on your side and on the Brussels side of how dependent and how it can be just switched off for Europe very quickly?
Oui, les Américains sont des alliés. Donc je ne pense pas qu'il y ait de tensions qui nous coupent.
The US are our allies, so I don't think there are tensions that cut us off from digital services which are fundamental to the functioning of the European Union. However, Recent developments concerning US export bans on AI have raised doubts about certain technologies, and it's precisely this doubt that will help us convince governments across Europe to achieve greater sovereignty. At the same time, our American partners are developing innovations we need in Europe, and we, in turn, are likely developing innovations that are scaling up in the US. Therefore, these interdependencies do not trouble me, provided they don't create vulnerabilities for Europeans.
And that was Stéphane Séjourné, Vice President of the European Commission. There, of course, he's been leading the charge on the Industrial Accelerator Act to try to reboost the industrial manufacturing in Europe to bring it to 20% of EU GDP by 2035 from around 14% at the moment. It's controversial. Some countries say there is a too protectionist as an approach, particularly the element of the Made in Europe that would be necessary for part of to receive, government subsidies and EU procurement as well. Other countries say, look, this is a pragmatic approach. This is only doing what the US and China are doing as well. So really interesting to hear there from the Commission's Vice President on all these aspects. Of course, as we know, there's a potential battle looming with China. They said they're talking about rebalancing trade between the two blocs, but we know that they've set themselves a deadline of October. But Europe, and including the Vice President, saying Europe needs to be tougher in its response to China, need to be ready to use some of the tougher tools if competition is unfair with some of these countries.
France has been doing that, and I've seen it firsthand in terms of some of the technology announcements. There's one about replacing AI tools from Palantir, the US company, giant US company, to using a local tech player. So at a national level, it seems to be happening.
And some administrations removing some of these platforms as well and using some European platforms and European companies instead of the US tech giants.
But more broadly, I think the political picture where you started is fascinating because it was the announcement of commentary from Christine Lagarde last week about potentially being interested. It was the first real glimpse that maybe she would be a player, despite all the rumours and all the speculation behind the scenes. The fact that she verbalised it and that she could be interested in the presidency.
That was really
What did that mean? How did that go down in France?
Yeah, it's really surprising because, her name has been rumoured. Every time there's an election and there's a question of who might be running, her name has been popping up because obviously she has been a minister, finance minister in France, and then she went abroad. There's always a question, will she come back? And also when you look at the names in the race, it's very men heavy, it's only men. And there's a question of, can women get in the race? Obviously someone who's very high profile, very experienced. The question is, does she want to do that? And, it looks like she's keeping an eye on the situation, but there are so many names in that race at the moment. Again, as I was saying, Edouard Philippe, Gabriel Attal, Retailleau, Dominique de Villepin, the list goes on and on and on and on. So they need to join forces because at the moment, because of that splintering, the far right and the far left are in the lead in all the polls. So it looks like you could get into a second round of the election with the far right and the far left and none of the centrist parties in that second round. So it'll be interesting. Can Christine Lagarde be the name that gathers all the forces behind her? That remains to be seen.
Maybe. I mean, she did it at the ECB, didn't she? She's managed to get a lot of the voices on the same page for setting policy. Charlotte, thank you very much. Coming up on the show, it's the biggest share sale since SpaceX. We'll get you all you need to know on SK Hynix's mammoth NASDAQ listing.
Hello, welcome to Squawk Box Europe. I'm Ben Boulos with Karen Cho. These are your Monday headlines. Crude continues to trend lower after falling below pre-Iran war levels last week as OPEC Plus countries agree to boost production. But the ECB's Gabriel Makhlouf tells CNBC that won't necessarily translate into immediate inflation relief.
We know inflation is already in the system, and the fact that oil prices have fallen doesn't mean that that inflation is going to disappear. So we need to continue to keep a very close eye on what's happening.
EasyJet shares take off after the budget carrier reaches an agreement in principle with Castlelake, the US investor due to acquire the airline in a deal valuing it at up to £5.5 billion. From Chinese competition to US tariffs, EU Industry Commissioner Stéphane Séjourné tells CNBC the bloc must defend its strategic interests in the face of mounting geopolitical challenges.
We have sectors facing unfair competition, and we're dealing with American tariffs, which we didn't want. Each sought to defend their own economy by re-industrializing. Europe's re-industrialization will also depend on defending its economy in strategic sectors.
And ITV announces the sale of its media and entertainment business to Sky in a deal worth as much as £1.6 billion between two of the UK's biggest broadcasters. So after lacking a bit of direction at the very start of the Monday morning open, European benchmark equity markets have found a direction, and that direction is upwards. As you can see, green to be found across the board on all the main bourses, and it is the Italian MIB leading the way at more than 0.4% higher. Let's have a look at the situation sector by sector, and some really interesting moves going on in some of these spaces you'll see on this board. Media stocks leading the way up 0.33%. This after we had news of that agreement for Sky to buy ITV's media and entertainment business. This deal had been in negotiations for some weeks and months. In previous times, it would perhaps have come up against competition concerns, but given the consolidation that's required now among linear broadcasters, traditional TV broadcasters, to fend off that threat from YouTube, Netflix, streamers and others as well, this deal now looks like it will go ahead. That has lifted the basket of media stocks there on the Stock 600. Also, interesting moves in travel and leisure with that deal agreed in principle by EasyJet to be sold to Castlelake, valuing EasyJet, the budget airline, one of Europe's biggest, at up to £5.5 billion. So some moves there, pushing those two baskets of stocks to the top of the gainers board. Autos and parts also there, and a mention of household goods up more than 0.75% this Monday morning in the first half an hour of trade. So that's where the positivity is to be found, but there's always a downside, isn't there? And this is the board of laggards. You can see utilities giving up 0.7%, tech off by 0.5% as well, construction, oil and gas also trending lower there this morning. Utilities have been the big winner in the Friday session, but giving up some of the gains there this Monday morning. Let's cast an eye ahead to what's being anticipated when Wall Street trading gets underway at the start of the week. And a positive start there, some gains to be found, all of the main benchmarks being called higher. Of course, there was no trading in the US on Friday. It had been closed for a public holiday. Of course, Independence Day and those 250th anniversary celebrations. Karen.
Ben, let's take a look at some of the corporate news flow this morning as EasyJet has agreed in principle to a takeover by Castlelake that values the carrier at up to £5.5 billion after rejecting 4 previous offers from the US investment firm. The UK budget carrier said the agreement includes a cash offer of £6.90 per share, and you can see the stock price has taken off this morning, trying to close that gap. This would take EasyJet private. Now, Castlelake now has until the 3rd of August to make a firm offer or walk away.
Thales has agreed to buy a 35.5% stake in Exail for €134 a share, with the French defence giant planning a tender offer for the remaining shares of the Ocean Technologies firm. Our next guest says European defence stocks should be traded more actively to reduce short-term downside risk amid the broader investor focus on AI, but argues the long-term case for the sector remains unchanged. Joachim Clement is Head of Strategy at Panmure Liberum and joins us in the studio. Very good morning to you. Thanks for being here. Just expand on that for us a little bit and your positioning around that at the moment.
Yeah, so when we look at the fundamentals, the European rearmament drive continues unabated. Especially Germany and Poland are spending more and more money on defense. Germany is leading the way in terms of monetary value, while the UK, where we had a lot of hope a couple of years ago, will probably get a lot of pressure from Donald Trump at the NATO summit in the next couple of days because they are not following through in enough quantity. Having said that, we have seen a lot of the defense companies sell off, especially since the beginning of the Iran war in the 1st of March, which on the face of it doesn't make any sense. There's now a second war on, not just in Ukraine, but in Iran, and they're selling off. But you can actually nicely correlate the sell-off and the weakness in defense stocks with the strength in AI stocks, in particular the semiconductor rally. And, you know, to us, it's a question of flow rather than fundamentals. A lot of fund managers are starved for cash, but we now have all those equity raises. First $85 billion from Alphabet, then $75 billion from SpaceX. This week, as we just heard, Hynix with $28 billion in their ADRs. If you're low on cash, where do you get the liquidity from to participate in these events? And it may surprise you, but fund managers are humans too, and they suffer from the same human biases than any other person, and that means we're inclined to take profits rather than cut our losses. So where do you have profits that you can take? In the past winners, in the defense stocks.
There was a really interesting graph in your recent note that I just wanted to get your thoughts on. You say the biggest problem with European defence procurement is countries invest in old tech, not drones. All of the indications from the current conflicts are that even a smaller military power with the right drone technology can hold its own against a traditionally mighty military force. Why then are these procurement companies, the European defence procurement, why are they not focusing on drone production and the like?
Yeah, as so often, generals are fighting the previous war, not the next war. And the problem is that the military-industrial complex in Europe is dominated by conventional weapons manufacturers, whether we're talking tanks, artillery, etc. And the lobby with the generals and the governments is stronger for those. Even though that, absolutely, I agree with you, the lessons from both Ukraine and Iran is we should spend way more on autonomous drone warfare, on AI, on electronic warfare systems, yet the procurement process is still designed for 20th century procurement and hence lagging.
To that point, there seemed to be a sentiment shift the other week when Rheinmetall was hit very dramatically by the cancellation of German orders for the F-126 frigate. That really changed the notion of, look, there are defence orders pouring through and it's about meeting some of that demand with supply constraints. That's been the issue. How do we perceive that news flow and what it means in terms of the actual demand story for the sector?
I think, in my view, the German government has done something very important and right in that respect to cancel the F-126 frigate, which was over budget, too expensive, and again, is a 20th century system, and focus more on the existing F-123, which is more modular and already in operations. So that is good from a cost management perspective, but what the German government has not done, and where Rheinmetall is also lagging, is focusing on AI-enhanced weapon system, drone-enhanced weapon systems. That's where we have actually more of the good news in companies like Leonardo, which has benefited from the Defence Investment Plan in the UK, not just in building together with BAE Systems the next generation fighter jets, but also weapon systems that are on ships or semi-autonomous ships that use AI and drone technology to fight.
I want to circle back to your point around flow, because we've been talking a lot on the show about flows and where the money is going at this stage. Given what we've just seen, where money has rolled across from hyperscalers into some of the semiconductor players, where there is now huge profits that some of those traders are sitting on, at what point does that get capitalised, turned into real profits, not paper profits, and the money then recycled elsewhere into hotter areas of the market. Is that something that you're also looking at?
Absolutely, and I think a lot of fund managers are looking for the next narrative, for the next story that drives a big return. At this point in time, what I expect to see is that a lot of those semiconductor names like Samsung, Hynix, etc., will show resistance simply because the IPOs of Anthropic are still ahead of us, potentially an OpenAI IPO, even though that might be delayed. And where do you get the money from that? Well, where have you made a lot of profits in recent months? It's the semiconductor space. And then once we're in those names, the question is, where will the next narrative come from? And at the moment, I can't really see anything.
So are these defence names, the fact that we've been talking about this and we're here to talk about defence, I mean, you've got these defence contracts that have been powering SpaceX. That is actually where the real money lies when it comes to profitability. And on Anthropic, we know the technology has been deployed in real life situations. And in fact, the Pentagon wanted more of it, despite Anthropic saying, I think we might have a few barriers here we want to cross first in terms of deploying more widely. How do those names get valued in a defence sense in 2026?
That's the really tricky thing, because if you would value them along their traditional defense peers, they would be massively overvalued. But we also have to be aware that electronic warfare is a tech phenomenon, and as correspondingly, these companies need to be traded like tech companies. It doesn't necessarily mean that they have to be as expensive and highly valued as Palantir, which is the poster child of that kind of electronic defense and warfare company. But definitely they deserve a much, much higher valuation than, say, a Rheinmetall or any of the conventional warfare companies.
Joachim, what are you going to be watching most closely when it comes to the NATO meeting this week?
Clearly, the response of the American government to the UK Defence Investment Plan, which clearly fell way short of the £28 billion that they wanted, 15 billion. Yet, at the same time, Andy Burnham, the likely incoming Prime Minister, has to find £5 billion in order to finance even that. And one of the things that I think will be interesting to see is how the UK government reacts to those two pressures. On the one hand, the pressure on the bond market to not increase its borrowing too much, and on the other hand, the pressure from its NATO allies to please plot a way to 3.5% of defence spending.
Joachim, I felt like there was a missing title for you when we read into you, head of strategy, but you also sort of head of football forecasting as well, right? And you've had a great...
Don't remind me of my failures.
You've had wins. You had Germany, France, Argentina. So you had 2014, 2018, 2022. You've bombed out in 2026.
Yes.
Down and up. But does the model get updated, and do you get any clarity from here about who the eventual winner could be?
Well, so I started this 12 years ago in order to show how unreliable economic forecasts are. And then the worst possible case was that I got it right 3 times in a row. So finally, I'm actually quite glad that I got it wrong and people start to reassess the reliability of that model. And no, in my view, the model has not failed, so I'm not going to change it. I was just very unlucky with the Netherlands losing a penalty shootout against Morocco. I mean, come on.
Well, it's like economics, forward guidance. Don't provide it, just change it when the data comes in, change the model. This is Kevin Walsh, now you get another go at it. Last minute, you make a call.
That's the temptation of so many forecasters. Like, if the model is wrong, I change the model until it fits the latest data point. Well, that's exactly the wrong way to do it.
That's what central bankers are doing.
Absolutely, but I don't necessarily agree with that.
Joachim, thank you very much for joining us. Joachim Clement with us, head of strategy, head of football forecasting, Premier Liberia. Ukraine said at least 7 people have been killed in a Russian missile and drone strikes on Kyiv overnight, with 24 injured. Neighbouring Poland, a NATO member, briefly scrambled fighter jets as a preventative measure. Russia said that President Putin had a nearly 90-minute call with his American counterpart, Donald Trump, on the 4th of July, during which time Trump offered to help end the Ukraine war. Russia's foreign ministry said Putin congratulated Trump on the 250th anniversary of America's Declaration of Independence and described the conversation as, quote, highly constructive. All this ahead of a crucial NATO summit in Ankara starting tomorrow, with members not seeing eye to eye after the Trump administration's actions on Iran and Greenland. Meanwhile, the US ambassador has warned allies need to hike defence spending to 5% of GDP as soon as possible. Trump is set to join his fellow 31 NATO leaders in Turkey, meeting his Ukrainian counterpart Zelensky on Wednesday. European leaders are expected to pledge increased defence spending after NATO chief Mark Rutte announced in June that tens of billions of dollars in arms deals will be signed at the summit.
Still to come on the show this morning, European football authorities reportedly plan to issue a statement as soon as today, coming out against FIFA's decision to suspend a one-match ban on a US player after reported claims of lobbying from the president himself. To the latest in the World Cup and some controversy as US striker Folarin Balogun's one-match ban for his red card against Bosnia and Herzegovina in the previous match has been suspended by FIFA for a year. The move, which came without any explanation or justification, followed criticism from the Trump administration and means Balogun is now available to play in the team's round of 16 match against Belgium today. US President Trump thanked FIFA in a post on Truth Social, while the Belgian Football Association said it was astonished by the move. Meanwhile, Norway made the World Cup quarter-finals for the first time as star striker Erling Haaland scored twice to send five-time winners Brazil home. Norway will now take on England in the last 16 after a dramatic evening at the famed Azteca Stadium, with 10-man England securing a backs-to-the-wall victory over co-hosts Mexico. Jude Bellingham scoring twice in the span of just 98 seconds before half-time. I mean, so much excitement around this. Real boost for hospitality here in the UK. Our international viewers may not be aware. Pubs were given special permission to stay open until 5 a.m. As I was making my way in, there were people making their way home.
The bell didn't ring. The last order's bell did not ring this time.
I don't think
the lights didn't come on at 11 o'clock.
No, they stayed open. I saw people, as I was heading home to bed last night, there were people drifting their way to the pub, just bedding in for the night to enjoy the match.
That's every Brit's dream, isn't it? That the pub stays open forever.
Absolutely. Well, I mean, every Brit's dream, every hospitality industry sector's dream, but perhaps less good for those who are due in offices this morning. I wonder how many are opting to work from home, how many perhaps having a slightly later start today.
Well, Mr. Trickwick just rolled on from the pub into the studio this morning and just continued on with coverage. But I think what that match had was the storytelling. There was so much drama. It was hard fought. You had a host country as well playing in front of a very energised crowd. So it was the emotion that went with it that was highly significant. The other points to raise here, is it just me or is there more fever around the World Cup than around the Olympics? which is quite something because it was always the Olympics, but that came and went, and it didn't really feel like people were as engaged with that as they are around the World Cup. And is this the whole geopolitics coming into the sporting arena, that there is so much nationalistic pride now around beating everyone economically, beating everyone with technology, beating everyone with very strong policy? I mean, this is obviously led by the US president, and various wars have been fought. Has it spilled across to the football world, where you now have very strong determination for countries to see their team win because it's just an extension of the geopolitics?
Also, on a broader philosophical point, to pick up on that theme, I wonder if in a world that is so uncertain and difficult to make sense of at times, that actually people feel they can speak with authority on the prospects of one team or another, and in some cases really putting their money where their mouth is. As we've seen, prediction sites have taken huge sums. Kalshi, for example, which CNBC has a data partnership with, saw more than $31 billion in volumes during the month. That's 70% up on what they saw in May. So people really putting their money where their mouth is when it comes to their assertions about the detail they know and the confidence with which they're making forecasts for this tournament.
Let's just think about that. The prediction markets have been on an absolute tear. That is where the volume of transactions have come through. And you've got organizations, businesses that were built traditionally around crypto because those crypto transactions were much more frequent than stock trades. So now we've morphed into prediction markets by very similar players that are clipping the ticket on an hourly, daily basis, much more than, again, the stock trade and, again, the crypto market. So, I mean, I was talking to Robinhood about this the other week, and they re-geared their entire business model. So they're in the rails, not just the product on top. Kalshi, of course, has been owning some of the rails in the industry, so they get the lion's share of the revenue. But you've seen very much a change in business model to lean into events like this and others where they can see the prediction market revenue coming from.
And I think the other thing where there's some big numbers involved is the ticket prices. I'm not sure if you're
How much are we talking? No, I haven't been looking.
19th of July in your diary, Karen, for the final at the MetLife Stadium.
How much is it going to cost me?
Dynamic pricing means a Category 1 ticket for that, more than $32,000.
I like pushing that one through standards here at CNBC. I think that's going to be a firm no if any of us have an invitation. Let's push on to what we're seeing out of semiconductors. It's a huge week for the space as Samsung Electronics is expected to announce an 18-fold jump in Q2 operating profit to a record high. The South Korean chipmaker is likely to estimate an operating profit of more than $56 billion tomorrow amid a prolonged memory shortage. While the world's second largest chipmaker, SK Hynix, will also test the market this week, it is set to launch a US listing on the Nasdaq to raise around $28 billion, according to regulatory filings. The deal is anticipated to be the second largest share sale after the SpaceX IPO last month. And bring just pieces together, we're talking about flows and how significant they have been, where you've seen investors recycle money from the hyperscalers into the semiconductors. Are we at the point where the semiconductor market profits are being recycled elsewhere? And we're just talking about that with our last guest, going to SpaceX, going into other more frontier technology. This test of the market is real today because we get the test on can 28 billion be raised from a market that's already been invested in some of these companies through ETFs. SK Hynix, in case you're not aware, is the largest stock now on the Cosby, and it's in a ton of ETFs. It's in a ton of leveraged products. So it's already been testing the market. So the appetite for more of this product is going to be interesting before we get the Samsung show and tell on just what the trajectory looks like on the life cycle of the semiconductors. And effectively, we are seeing the earnings roll through. I mean, the earnings have been very strong on the back of what has been a 44% increase in DRAM and a 53% increase in NAND products in the quarter. So the sustainability of those earnings for a lot of investors is crucial.
Yeah, and I think the other point that this sort of highlights is the argument that there's a rotation away from the US to the rest of the world. Actually, companies do still drift towards the US. They see that as the deepest, the easiest market for liquidity for capital, and so they're drawn to that when they want to kind of try and boost their fundraising.
Yeah, it might be also a fly in the wall moment for OpenAI, whether it sees that appetite, and Anthropic too. We are counting down to the next hour, and so far this is a look at how we're trading across markets. It's a firmer day of trade. Welcome to Squawk Box Europe. I'm Karen, show with Ben Bullas. These are your headlines. Crude continues to trend lower after falling below pre-Iran war levels last week as OPEC plus countries agree to boost production. But the ECB's Gabriel Makhlouf tells CNBC that won't necessarily translate into immediate inflation relief.
We know inflation is already in the system, and the fact that oil prices have fallen doesn't mean that that inflation is going to disappear. So we need to continue to keep a very close eye on what's happening.
EasyJet shares take off after the budget carrier reaches an agreement in principle with Castlelake. But the US investor set to acquire the airline in a deal valuing it at up to £5.5 billion.
From Chinese competition to US tariffs, EU Industry Commissioner Stéphane Séjourné tells CNBC the bloc must defend its strategic interests in the face of mounting geopolitical challenges.
We have sectors facing unfair competition, and we're dealing with American tariffs, which we didn't want. Each sought to defend their own economy by re-industrializing. Europe's re-industrialization will also depend on defending its economy and strategic sectors.
Red card controversy. US President Donald Trump personally thanks FIFA for lifting US striker Folarin Balogun's red card ban, prompting anger from Europe's federation. Meanwhile, England and Norway fans rejoice following their country's World Cup aerobics. Well, some optimism to be found among some countries' sides in the World Cup, and some optimism to be found on European equity markets as well. Look at this, green across the board, across all the main bourses. The Italian MIB leading the way along with the Paris CAC, the FTSE 100 and the DAX also firmly into positive territory this morning after a bit of a faltering start to the Monday morning, but an hour into trade and decisively in the green. Let's see how it breaks down sector by sector, and this is where we're seeing the most impressive gains. It's media stocks leading the way, up 1.5%. This after that news of a deal by Sky to buy ITV, two big UK broadcasters to buy ITV's media and entertainment business in a deal worth £1.6 billion, seen as a way to consolidate and fend off some of the threat from streamers, the likes of Netflix and YouTube. So that lifting the media basket of stocks. Their autos and parts also advancing, up almost 1.33%. Travel and leisure up by more than 1% there. This after the news that EasyJet has agreed in principle on a sale to Castlelake, the US investment firm that values EasyJet to the budget carrier in Europe at up to £5.5 billion. Financial services, the last one there, rounding off the board of major gainers. Let's see where the biggest downward pull is coming from. And utilities, tech, telecoms, oil and gas, all retreating this Monday morning. It's utilities off by the most. Have been one of the biggest gainers on the Friday session, giving up 0.8%. Tech also taking a bit of a breather. We've seen some really impressive moves in that space, but perhaps some profit taking happening there. Telecoms and oil and gas also retreating this morning. In terms of what's being anticipated on Wall Street, a positive start being called across all the main benchmarks, with the Nasdaq looking to lead the way, being called more than 1% higher. This after the markets gear up to reopen after having Friday off for US Independence Day public holiday. Karen.
Let's turn to the semiconductor space. So we've been talking about it all morning, but it could be potentially a very large week for the sector. The world's second largest chipmaker, SK Hynix, is set to launch a US listing on the Nasdaq to raise around $28 billion, according to regulatory filings. The deal is anticipated to be the second largest share sale after the SpaceX IPO last month. Well, Matt Orton joins us, Chief Market Strategist, Raymond James Investment Management. Matt, the way that is spelt out, it looks as though it's the first test of the market around SK Hynix, but we know that's not true because this is a name that is really wrapped up in a lot of global ETFs. A lot of investors are aware of the story that's played out. It's been powering the likes of the Cosby for many, many months now. What do you think appetite looks like for even more capital to be raised from this company?
Well, good morning, Karen. And I think it's still fairly strong. It's not going to be a surprise if you see a little bit of, I'd say, chop in the overall market, because you have not only standard ETFs that incorporate Hynix and Samsung into them, but you have levered ETFs and you have really extended positioning heading into this. So we've reduced some of that with the sell-off over the past 2 weeks or so, but there's probably more to come. I think investor appetite is strong. It'll probably flow in and be reflected over the coming weeks, I would say, as opposed to just a one-day type of event. So if there is any weakness, I think that's a good opportunity for investors to buy that weakness, because I still have a lot of faith in the overall semiconductor trade, particularly over the long term.
That is fascinating, because we were talking to a guest from Morgan Stanley earlier, and she was telling us she thinks that market breadth is returning, but it's going to take full market breadth for the semiconductor space then to get a rally on the back of it. Would you depict it the same way?
I think that's accurate, because you've seen the market narrow, and you've seen the strength concentrated where earnings growth has really been. And earnings growth has been very concentrated in the semiconductor story. I think that's well reflected in share prices at this point, and investors may have maybe swung the pendulum too much into the semiconductor space, whereas now we're looking for where is that earnings breadth not really reflected in price breadth yet. So the market's doing a little bit of price discovery at this point, but I do think ultimately we're going to come back to the semiconductor trade because the earnings durability is just so strong.
Yeah, well, to that point, though, there's get an unknown. We get past next year, so we know the demand's there, and we know what it's looked like to date, where the semiconductor company said, I've only got so much supply. If you want it, the price action looks like this. Company said, okay, that's not great, but I have to place the orders. I'm going to have to put up my prices. Apple included as one of the key customers, putting up its prices 20% because it can't get its hands on the same amount of chips. If that flows on into 2028, then we start to think about it even more duration around the price earnings story, right?
Exactly. And that's what happened over the past year. I think so many investors said this is a 2026 story. Maybe we'll start to see that cyclicality return to the semiconductor space in 2027. We got earnings last quarter, which were just blockbuster across the board. And guess what? Now 2027 is sold out really into 2028. And so this earnings season, Karen, I think is going to be really important to the story, not only from the hyperscaler side. Are we continuing to see CapEx maintained, if not increased? And once we have that confirmed, which I think is going to be the case, once you start to hear from the semiconductors in a couple of months, are we also getting corroboration of that story? Are we also seeing earnings guidance continue to go up like we saw, say, with Micron, a couple of weeks ago?
Matt, do you think given where we are with oil now and the price falling back, do you think that all the talk about the inflationary effects was overdone, and markets maybe sort of were a bit too quick to price in the potential for interest rate hikes?
I think so. I was surprised by how much the pricing of interest rate hikes moved in the overall market, particularly after the FOMC meeting at the end of June, because nothing to me from what Warr said really depicted a story that they're going to be incredibly aggressive in hiking interest rates. I think it was more, we are truly data dependent, and we will look at the totality of the tools that we have in order to make decisions going forward. So my base case is to have no interest rate hikes this year. I think we stay on hold. I think the data that we've received recently helps make that story a possibility. But again, every meeting's going to be live. I think there's the emphasis on U.S. macroeconomic data is going to be elevated over the next couple of months, just because we're going to have to see if this story that inflation hasn't flowed through broadly into the services space continues to be the case.
Your note also points out that the healthcare sector stocks are starting to show signs of life. Is that a hint that maybe investors are growing slightly wary of the volatility they're experiencing in tech and looking for slightly more stability, albeit without the same excitement?
I think so. I don't know if it's without the same excitement, because if you look at a space like biotechnology in the U.S., it's up something like 80 to 90% and sitting close to all-time highs. So there's a lot of idiosyncratic stories within the healthcare space. And I think you're seeing earnings growth also finally start to increase. Healthcare was the only sector in the U.S. that had negative earnings growth over the last quarter. That's going to flip to positive this quarter. And I think the strength you're seeing in HMOs, in biotech, genomics, those are the places investors should lean into. And if we actually get good news in the medical device space, that can also help propel the sector higher. So valuations still look fair. Correlation to broader equity markets is lower. So as an investor, if you want to complement your AI exposure or growth overweights in your portfolio, looking to some place like healthcare, I think makes sense because you can help combat some of that increased volatility like you mentioned.
And how much do you think we're going to see an effect from portfolios being rebalanced, given the big moves we saw in some sectors, and we're now at the halfway point in the year? Investors may be looking, thinking just a bit of rebalancing needs to be done, some maybe rediversification. How much do you think that's going to move equities?
So, Ben, I think we've seen a lot of that take place already. The end of the second quarter, at the end of June, I think was the time where we started to see a lot of that rebalancing. That perhaps led into some of the weakness in semiconductors, because I would argue it's positioning related, not at all fundamental. And so now that you've seen that take place, if you start to see some strength come back into semiconductors, eventually investors will start to look for it, but you've got to have more of a washout in positioning. I think now everyone's focused on broadening. As banks start to report over the next few weeks, will we see that reflected in earnings? And if the answer is yes, then I think this broadening trade can last a little bit longer. But again, it's where earnings are actually increasing, not just breadth for breadth's sake.
Matt, I want to tackle the central bank position that you set up, because I'm not convinced at this stage. We've got still a lot of hawkish commentary out there. I mean, Bank of America was talking about 3 rate hikes this year. The scenario of no increases would come at a time when we've seen the Fed's preferred inflation gauge above target for 5 years. And there is a view that the Fed simply has to react because it can't sit on the sidelines anymore. We had a hint of that in Central last week, that some credibility might be in question if the Fed doesn't do something. Why would it not give a preemptive strike just to give it some firepower, even if the oil story falls back much quicker than we anticipate?
I think it's twofold. I think number one is, while the U.S. economy has been incredibly resilient over the past year, a lot of that resilience has been because of the spending that's taking place on the technology side of the equation, which also itself is inflationary. So that is a challenge for the Fed, but the overall economy, the consumer has held up, but it's not a bright growth story. It's hanging on. So I think the underlying U.S. economy is perhaps not as strong as being reflected from headline numbers because of what's happening in technology, but also the movement that you've already seen with respect to interest rates has done some of the work for the Fed already. The stronger dollar is doing some of the work for the Fed. So I think the need to further tighten financial conditions into a period where we have questions around what could global growth look like. The conflict in Iran is not 100% resolved. While oil prices have moved down, they can still move up once again. So I think it's a wait and see period. There's no imminent need to hike interest rates again, where I think we've seen the peak in inflation. I think the question going forward is, do we start to see that roll over and see disinflation come back at perhaps more of an aggressive pace that the Fed would need to remain on hold? Or do we see really persistent feed through into some of the services part of the equation?
Yeah. Part of me does wonder whether we're sort of in this up and down phase, though, with central bank decisions rather than going in one direction than going in the other. But I want to push on to what you just said around the biotech part of the market and healthcare and why there could be more interest there. It feels, if you look at the healthcare sector, there's been a couple of big drivers. There's the GLP-1 drugs. There's been a huge appetite for that. But there's also been a home advantage for a lot of the big pharma stateside, where Europeans have been under pressure. Home pharma has been given a clear run to try and grow market share, thanks to US President being quite clear that he wants a lot of the manufacturing facilities in the States. The other leg here is that AI should start solving some of the healthcare challenges. Like, it should at some point make a difference to drug discovery. Is that the factor we're talking about here now, that upside potential when we really truly crack the innovation phase, it is actually going to unlock something significant on the profit side?
I think that's a huge piece of the equation. And I think it's not just for biotechnology. We're already seeing that feed through on the HMO side. So you look at the strength and resiliency that you're starting to see come back to all of your insurance type companies. That is really being driven by integration of artificial intelligence into their overall business models. So that's a great adopter's case for artificial intelligence. The read through for AI helping with scientific discoveries, we're making great progress there, but it's not really really the story over the next year or 2 years. It's going to take time for that to play out. But I think the bigger story is the acquisition nature of big pharma that you talked about. They have a lot of cash on their balance sheets. Many big pharmaceutical companies are coming up against patent cliffs. And so what do you need to refresh your pipeline? You've got to buy innovative biotechnology genomic companies. And that's exactly what's happening. Small cap M&A is on fire. And that's also why I like looking at down market cap opportunities, particularly biotech, because they are at the forefront of this acquisition activity.
Oh, great explanation. Of course, we've been talking to all these big pharma companies about the patent cliff, so great to put that together. Thank you so much for joining us, Matt. Matt Wharton with us, Chief Market Strategist, Raymond James Investment Management. And to the airline space, where EasyJet has agreed in principle to a takeover by Castlelake that values the carrier at up to £5.5 billion after rejecting 4 previous offers from the US investment firm. The UK budget carrier said the agreement includes a cash offer of £6.90 per share and would take EasyJet private. The stock price has moved, as you can see. Big bounce today, 10% as it's reacted to the latest offer. Castlelake now has until the 3rd of August to make a firm offer or walk away. Coming up on the show, political intrigue dominates the conversation in Aix-en-Provence ahead of a court ruling on whether Marine Le Pen can actually run in next year's presidential election.
Welcome back. Inflation is already in the system. That's the warning from the ECB Governing Council member and Central Bank of Ireland Governor Gabriel Makhlouf, who told CNBC that price pressures are not going to disappear despite the recent slump in crude prices. Speaking to Charlotte, Makhlouf advised caution on developments in the Iran conflict.
We should just be careful about reading announcements of the end of the war or announcements of, deals. We should just wait to see what actually happens. So certainly the fact that oil prices have gone down is a positive thing. But we know our June decision, where we raised rates, we know inflation is already in the system. And the fact that oil prices have fallen doesn't mean that inflation is going to disappear. So we need to continue to keep a very close eye on what's happening.
A Paris appeal court will tomorrow decide whether Marine Le Pen, leader of the National Rally Party in France, can run in next year's presidential election. Le Pen, who's currently topping opinion polls, was convicted in 2025 on embezzlement charges and barred from holding public office for 5 years. The appeals court will decide whether to uphold the conviction. If it is upheld, Le Pen has pledged to support her protégé, Jordan Bardella, in next year's presidential race. Well, Charlotte joins us with more now, and presumably one of the topics that dominated conversation in Aix-en-Provence last week.
Yes, and tomorrow will be a really important date because that will be, of course, determine whether Marine Le Pen can run in the election. And, it's a lot of uncertainty on this election. Then we'll know only on May 2nd, 27, who is the next French president. But certainly the far right has been leading in the polls. And a lot of candidates have thrown their names in the ring as potential candidates because here again, Emmanuel Macron cannot run in an election again after winning 2 of them. And so there are multiple names because there's no obvious direct heir of his party. So you have former Prime Ministers Edouard Philippe, Gabriel Attal already mentioning that they're interested in running, Bruno Retailleau, François Hollande, the former president, including the Prime Minister, the current Prime Minister, Sébastien Lecornu, in Aix during the rencontre, mentioning, kind of hinting that maybe he's looking at his own chances. Christine Lagarde, the president of the ECB, also in an interview from Aix, hinting that maybe she's keeping an eye on the domestic situation in France and that she could end her mandate at the ECB earlier than expected. So it all is at play there in this all-important election. Another person that is potentially running in this election is Dominique de Villepin, former Prime Minister between 2005 and 2007 under President Chirac. He also faced big protests at the time when he tried to put in some reforms around employment laws. He was also Foreign Affairs Minister for a couple of years during the Iraq War, and he became very famous at the time because he made a very impassioned speech in the UN National Assembly in 2003 talking about incalculable consequences of military action in the region. So when I had a chance to catch up with Dominique de Villepin, I asked him about the current situation in Iran and what he feels the situation of France and Europe should be.
We have to tackle all the former problems that we were facing on nuclear, on missiles, on proxies, but we have also to tackle the question of the Strait of Hormuz. So we have all those issues on the table, but I think that the Trump administration is understanding that war is not an option, it's not a solution. Okay. And war is creating more instability, more imprevisibility for the whole world economy. So we need to consider now some peaceful strategy. Of course, it's not easy. We need to go back to the table of negotiation. I think that it will be wise for the Trump administration to consider having Europe as a partner for these negotiations because we have a strong experience mainly for the nuclear issues, and we know well the Middle East, so we could contribute to the stabilization as well as to contribute to monitor the situation in the Strait of Hormuz. So I think that it is time to take the lessons of what happened in the last month, what happened in the last 25 years. We have not been able to solve any wars in the last 25 years. The new wars are not settled yet. We can see the situation in Iraq, still a very chaotic situation, the situation in Libya. We have, in most of this region, failed states, so we need to take the whole world community the lessons and to go back to a more multilateral world, but this is still a long way to go.
And yet we know that behind all these key issues, whether it's Iran or Ukraine, next week the NATO summit coming up, we're just coming out of a G7 summit, all the background is the relationship with the US. It has been a rebalancing lately, of course, and the threats of tariffs, etc. What should be the relationship of France and of Europe with the US now?
Well, we should still try every day. It is difficult because Donald Trump is well known to change from one day to another, but we should keep trying and we should keep working for the world's stability. And we have many partners around the world. Many countries in the global south, they want to go back to a strong multilateralism. We need to have some strong common rules, some important common goods. So we know what we should do. But of course, that will be much easier if the Trump administration is opening its own eyes and taking the lesson for the future.
Final question, of course, Mark Carney talked about the question of the middle powers and how they can create an alliance and a counterpower to the US and to China. Is that something that you think is a good idea? This is where we should be and where our strength could be.
I think the Canadian Prime Minister and many others have thought about this alliance of middle-sized country. I think any type of organization is good. Whatever gives shape to new alliances, to new ideas, is good. But we need also not to forget that Europe has a challenge to be more able to face its own destiny, to take the destiny into its own hands. And we need not to forget, for that, we need power. So we need to take the lesson for ourselves and to get a stronger European organization, stronger tools, not to hesitate to use these tools whenever it's needed.
That was Dominique de Villepin, the former Prime Minister of France, talking about how Europe needs to be more able to face its own destiny and need power, of course, in the complex geopolitical context. On the same topic, I sat down with Stéphane Séjourné, the Executive Vice President of the European Commission. Of course, he's been leading the charge on the Industrial Accelerator Act since the beginning of the year, designing to boost industrial manufacturing in Europe to push it to 20% of EU GDP by 2035 from around 15% at the moment. There are some controversial elements into this piece of legislation that is still under scrutiny while the discussions are ongoing between the member states. And some see it as quite pragmatic, others see it as too protectionist. So when I sat down with the Vice President, I asked him whether he was surprised on how controversial his proposal was.
Oui, c'est à la fois difficile parce que c'est un changement de doctrine.
Yes, it is challenging because it represents a shift in doctrine. First, but at the same time, it's highly anticipated by many economic players. The proof lies in the fact that here in X, a large part of the business community is eagerly awaiting this legislation and even wants to expand its scope to cover several sectors of the European economy. So we have at the same time some political reluctance, but that attitude is gradually shifting across Europe. I believe value chains are being disrupted all over the world and we must respond as Europeans. And there's great expectations from the business world.
And yet we've heard some critics saying that yes, it is a paradigm shift, certainly, in principle, but it's a paper tiger in practice, this legislation. What do you say to that?
Moi, je pense qu'en pratique, il faut être pragmatique.
I believe we need to be pragmatic. We have sectors facing unfair competition, and we're dealing with American tariffs, which we didn't want. Each sought to defend their own economy by re-industrializing. Europe's reindustrialization will also depend on defending its economy and strategic sectors, such as clean tech, automotive and construction, as well as parts of the chemical industry, which is the industry of industries in Europe. In short, regarding all these sectors, we must be pragmatic and also consider the international landscape.
And on this question of unfair competition, we know we saw this joint communique between the EU and China recently, the first one in many years, reopening talks to try to rebalance the trade relations. And yet it looks like a battle is looming with China very soon. How do you position yourself in a strong position against China?
Je pense que d'abord, il y a un sujet de méthode et de crédibilité des Européens.
First, there's the matter of method and credibility from the Europeans. We must stand united and be able to use our trade defence instruments to establish that credibility. So for now, Europe needs to demonstrate that it's prepared to close its market when fair competitive conditions are not met.
L'Europe est prête à permettre justement.
Europe is prepared to allow the use, notably at the Commission, of tougher trade defence tools. And so we're currently working internally at the European level to have that credibility. In a second time, we will need to reach an agreement that balances trade, and so we need probably some level of interdependence. But today there's such an asymmetry in our dependence on China that it's no longer sustainable for the European economy.
That was Stéphane Séjourné, the Vice President of the European Commission, here talking about how Europe needs to be prepared to close its market when competition is unfair and allow the use of tougher trade tools. And so, of course, again, this comes in the context when there's ongoing conversations around its Industrial Accelerator Act, Europe trying to see how they can respond to the US and China, this Made in Europe element into that legislation that is controversial, you know, making a percentage of the parts of some key technologies that need to be made in Europe in order to benefit from government subsidies. subsidies. Some countries concerned that there might be some retaliation then from other actors. Also concern around excessive red tape. At the time when we talk about deregulation, there was some concern about this. Here again, the Commission's answer in some other countries like France saying, look, that's what the US and China are doing. We just need to be able to do the same. And so that's really the ongoing conversation at the moment. How much pushback can Europe do? Yeah. And is it strong enough to push back against countries like China? And we know there are ongoing conversations with China on rebalancing trade. What's the position of Europe? Are they ready to act tough, or do they want to play nice?
It's the poor old autos and wine and cheese part of the market in Europe that gets hit every time with the retaliatory action. Right?
In time of election as well. And, in many countries next year it's election. In Europe, in Spain, in France, in Spain, in Italy. And so when you have one of your key sectors hit by retaliation, it doesn't look good.
Charlotte, thank you very much. Coming up on the show, we'll switch gears and talk crypto as Bitcoin posts losses of more than 25% for the year. Welcome to Squawk Box Europe. I'm Karen Cho with Ben Boulos. These are your headlines. Crude continues to trend lower after falling below pre-Iran war levels last week as OPEC Plus countries continue to boost production. But the ECB's Gabriel Makhlouf tells CNBC that won't necessarily translate into immediate inflation relief.
We know inflation is already in the system. And the fact that oil prices have fallen doesn't mean that inflation is going to disappear. So we need to continue to keep a very close eye on what's happening.
EasyJet shares take off after the budget carrier agrees an agreement in principle with Castlelake, with the US investor set to acquire the airline in a deal valuing it at up to £5.5 billion. From Chinese competition to US tariffs, EU Industry Commissioner Stéphane Séjourné tells CNBC the bloc must defend its strategic interests in the face of mounting geopolitical challenges.
We have sectors facing unfair competition, and we're dealing with American tariffs, which we didn't want. Each sought to defend their own economy by re-industrializing. Europe's re-industrialization will also depend on defending its economy in strategic sectors.
Red card controversy. US President Donald Trump personally thanks FIFA for lifting US striker Folarin Balogun's red card ban, prompting anger from Europe's federation. Meanwhile, England and Norway fans rejoice following their country's World Cup heroics. look at European markets at this hour, and what we've been watching across the board has been a bounce for European markets. They look like they'd be cautious, potentially even in reverse this morning, but not the case. We've picked up where we left off last week, where we broke out of the lower ranges, and we've bounced into record territory. So some of the momentum truly returning, up 0.4, and we've pushed through the 10,700 level on the FTSE 100. The DAX has been at records, again topping up on those levels. French stocks catching a bid, and across in Italy too, somewhat outpaced by the French market. Typically on the upbeat days, it's Italian names that are leading the charge, but it is the French market today that has that baton. To what we're seeing at a sector level, the ones really powering some of the gains this morning, it's falling on media stocks, some deal making. We've been talking about ITV selling its media and entertainment business to Sky. That has again cast more attention on the sector that has been somewhat beaten up of late. Autos and parts. So if we're looking at some of the bottom up picks here, this has been an area truly sold off fairly aggressively. That's also moving this morning. Travel and leisure, retail rounding out the improvers. The red that is still attached to the boards this morning, what we're seeing at a sector level, it is utilities, that is down 0.9%. Tech, and that's interesting because it is a huge week for the semiconductor plays. We're talking about SK Hynix this morning listing on the NASDAQ, waiting to see how that's absorbed, and some earnings news, an update from Samsung in the space this week. So that'll be crucial for the sector. We've got construction telecoms rounding out some of the red. Now, US futures. We didn't get any action stateside Friday. It was closed for the Independence Day holiday, but we're looking to see tech pick up some of that news flow and push into the green this morning, despite what we're seeing here in tech in Europe. So that is an interesting divergence already first up this morning.
Let's focus in on cryptocurrencies, because we've seen some falls year to date with Bitcoin, I suppose poster child when it comes to the cryptocurrencies, down by around 25% so far this year. We can bring in Lucy Gazmararian, who's founder and managing partner at Token Bay Capital. Lucy, I was just looking at some of the others as well. It's not just Bitcoin. Ethereum down around 40% year to date, Solana down around 35%. What's your take on this? What's going on there?
Yeah, so we saw some of the sell-off beginning already at the end of 2025, and really we're just seeing it continue into 2026. So it looks like the 4-year cycle from a price perspective is playing out, and we could see further lows in Bitcoin. As you say, it really leads the pack of all the other cryptos, but all the other cryptos, could even be under more pressure as we head towards really the full capitulation of this bear market before we see some consolidation and then some recovery in the crypto prices. But I will say that while the price action is pretty bleak, it's really not unexpected, but still bleak. What we're seeing in terms of the activity and the players in the industry and the types of products that are being issued are actually far surpassing the last few years. So we're seeing a lot more of the institutions come in. We're seeing a lot more Bitcoin ETF providers from the big banks. We've seen Goldman Sachs, Morgan Stanley with ETFs. So while the price is very depressed, the story of the actual players and products in the industry has never been stronger.
Lucy, warning klaxons do not come much louder than one that is sounded by the Bank of International Settlements, often described as the central bank to central bankers. It warned a couple of weeks ago that stable coins, a form of crypto of course, as a form of sound money, fall short, and further, they say, without regulation, pose a risk to financial stability. What do you make of that warning, and how cautious now should investors and markets be, given the potential exposure there and knock-on effects if there were to be a wobble in that space?
I think that's actually very accurate from BIS. So we've seen the US actually be on the front foot when it comes to regulation around stablecoins. They are an incredibly important part of the crypto landscape, arguably the most successful use case in crypto markets. But more than that, it's really exporting US dollars around the world into hands of businesses, corporates, but also just individuals that can now access US dollars, not through a bank account because they don't have access to the US banking system or bank account, but they can access US dollars through their crypto wallet very easily. So we're seeing this enormous proliferation of USD-backed stablecoins and sort of dollarization, actually, of a lot of economies. And it requires regulation. It's the most important commodity in the world right now, the US dollar is the world's reserve currency, and it does require appropriate regulation so that we understand, the full picture of how crypto and fiat currency like US dollar is intersecting.
To that point, Lucy, is that why crypto is being disrupted? Some of the money that has been moving around through shadow economies and through crypto has now moved elsewhere because the regulation has come into the mix around Bitcoin, and the money's now going elsewhere through stable coins. That's how it's been flushed through the global economy.
I mean, even if you've got a lack of regulation or you've got grey areas still in certain jurisdictions, the one thing to remember is that blockchains give you sort of indelible print of activity. So you do have that record keeping as blockchain is the new sort of settlement layer for these stable coins. So yes, if intermediaries like crypto exchanges and payments companies are not conducting appropriate KYC to any users that are buying or selling US dollar stable coins on their platform, then there could be some loopholes there. But they really are very few nowadays. It really has a regulatory landscape when it comes to USD-backed stable coins, and crypto in general has really been tightened up. We've got MiCA has a very comprehensive regulatory framework for crypto. The US is getting there. They started with stablecoin regulation. It looks like they're set to make some good progress on the market structure bill, the Clarity Act, which we're expecting some news coming out in the next few days. So really the most important financial economies have made very good progress on crypto regulation. So it's increasingly difficult to sort of fall through the cracks.
Lucy, I want to ask you what Bitcoin and the like are correlated with now, because there was a phase where we saw the direct correlation with tech stocks. Every time tech took off, so too did Bitcoin. That's simply not happened. Worth noting that gold has been under pressure lately, given all the concerns that, well, maybe the Fed will be more hawkish. Clearly today we're talking about a slightly different narrative with the oil price down and our questions dangling as to whether we correct more quickly on the energy side. But is there a correlation? Is Bitcoin correlated with gold now? How do we think about that?
Bitcoin, I think we need to remember, still a very new asset, 17 years old, still finding its way from a narrative perspective. 1 minute it's an inflation hedge, the next minute it's a risk-on asset. Actually, we saw it decouple from gold. We saw an incredible move in gold's price when we moved into the war, Iran-US war. And actually, Bitcoin sold off, so it didn't really hold up its digital gold narrative. So it's really kind of finding its way, but it is an important diversifier because it's not clear yet how Bitcoin is going to really play out in the shorter term. But I think if you zoom out and take a longer term look at the correlation of Bitcoin, it is a diversifier for portfolios. It is really on its own path, which is the drawdowns are very steep every 4 years, but the growth trajectory in terms of the long term chart is really up and to the right, and that's why we're seeing all the banks say actually to put 1 to 2% of your portfolio in Bitcoin and leave it there, not actively trade it, is actually an important diversifier as we move forwards.
Lucy, to me it seems as though the industry has moved on to hot areas, which is really the tokenization story. I was talking about that at the start of the year in Davos. The industry players I've spoken to now seem fixated on them. Robinhood the other week, for instance. The view was that crypto was so fantastic for the industry because the amount of transactions that happened. But it feels like now, as we tokenize everything, that the industry is now looking at that ability to be so much more profitable. What do you make of where the revenue lines are coming through in the industry and how that is detracting from Bitcoin itself?
So I think everyone's lining up for this big sort of tokenization, real world asset tokenization race. And the big names in the industry, the institutional players, the licensed entities are all ready and they have a strategy. What is the big piece of the puzzle that is currently missing is the clarity of the regulation. That is why this Clarity Act is so important, because until the rules of the road in terms of how centralized intermediaries interact with decentralized blockchains and crypto products, until that is very clear, the institutions cannot move institutional capital in a meaningful way into this space. So I think the view is that once we get that clear regulation from the US, we could see a snowball of activity, and it really could surprised the market, because it is absolutely clear in terms of the messaging, and when you talk to any of these institutional players, that blockchains, tokens, this whole sort of crypto finance economy is far superior from an infrastructure level than the current financial system we have in place. So I think everybody's ready to really launch and see where this takes us. But until the rules are defined by the US, it's going to be stalemate.
How robust can those rules in the US actually be? How confident can we be in them, given that President Trump personally, according to his disclosures, made more than $1.4 billion in crypto-related income in a single year out of total income of $2 billion. It makes up such a big part of his personal wealth increase that, you know, the temptation surely there is to continue to allow this sector to grow and to flourish, and have lighter touch regulation, perhaps, than some others feel is merited and indeed needed to provide the guardrails and protections for individual consumers and the wider financial markets.
Trump is certainly a case in point, and I would say that his activity and his use of this frontier technology has actually given the lawmakers in the US some really good material with which to analyze and see what the rules should be. So they are not clear yet. He has not done anything wrong. He's come out and said that. And crypto markets are potentially very profitable for a lot of different players, whether it's an individual, the president of the United States, or whether it's, you know, financial institutions. And certainly there does need to be clear rules in terms of conflicts of interest. You know, should senior officials in the US, in the government, should they have crypto exposure? All these questions are actually being talked through in the Clarity Act currently. And Trump's interactions with DeFi protocols and meme coins is providing material with which they can use to actually see what the best rules are. So yes, he's made a lot of money. A lot of other crypto people have made a lot of money in crypto markets. And there is definitely a need for more accurate disclosure, for more consumer protection. And actually that won't stifle activity. That is likely to unleash even greater levels of activity in the space. So Trump has really led the way in terms of showing how impactful this technology can be.
Lucy, thank you very much for joining us today. Lucy Gazmararian, the founder and managing partner at Token Bay Capital. Let's move on to the oil price. We are seeing what effectively looks like a meltdown in the price of oil now, which is highly significant after we keep on talking about higher for longer for the price action as oil resumes through the Strait of Hormuz. Fairly significant in terms of the shipping. 160 vessels reported from Monday through to Saturday last week. OPEC Plus agreeing to increase output, 188 barrels per day. We'll get into that in just a minute. But you can see now we've got some action year to date, of course, that has still been higher, but the reversal is highly significant. And even this morning, we were talking about some of the city forecasts for $60 per barrel on the price of Brent by year end, which is a lot lower than where we sit today. 71 is where we currently are. So whether we can get to that lower bar, there's not consensus out there, but it does suggest that we may see that flip side of the trade that has been very much to the upside so far this year, but to the downside as that normalization happens, just how violent the price action could be. Well, 7 OPEC Plus producers have agreed to raise production targets by 188,000 barrels per day in August, the fifth such hike since the start of the Iran war. The decision comes as transit through the Strait of Hormuz continues to recover, but remains firmly below pre-war levels. Crowds are gathering in Tehran for a funeral procession for Iran's late supreme leader, Ayatollah Ali Khamenei, part of a week of mass mourning for Khamenei, who was killed at the start of the war. 3 of his sons participated in funeral events on Sunday. However, current supreme leader Mojtaba Khamenei made no public appearance.
Coming up on the show, it's the biggest share sale since SpaceX. We will give you all you need to know on SK Hynix's mammoth Nasdaq listing. Plus, European football authorities reportedly plan to issue a statement as soon as today, coming out against FIFA's decision to suspend a one-match ban on a US player after reported claims of lobbying from the president himself. Hello, welcome back, and you join me in World Cup Corner. I'll give you the latest from the tournament and some controversy because US striker following Balogun's one-match ban for his red card against Bosnia and Herzegovina in the previous match has been suspended by FIFA for a year. Now, the move, which came without any explanation or justification, followed criticism from the Trump administration. And it means Balogun is now available to play in the team's round of 16 match against Belgium today. US President Trump thanked FIFA in a post on Truth Social, while the Belgian Football Federation said it was astonished by the move. And according to The Athletic, it has been granted the right to appeal the decision, having lodged a formal complaint against FIFA. Speaking to reporters on Sunday, Belgium's coach Rudy Garcia said, quote, "The Belgian Federation isn't just defending itself or the national team, it's defending football in general, its integrity and its ethics." The match between the US and Belgium is due to kick off at 8 p.m. Pacific time tonight in Seattle. Meanwhile, on the pitch, Norway made the World Cup quarter-finals for the first time as star striker Erling Haaland scored twice to send five-time winners Brazil packing. They're on their way home. So Norway will take on England in the last 16 after a dramatic evening at the famed Azteca Stadium. 10-man England securing a backs-to-the-wall victory over co-hosts Mexico. Jude Bellingham scoring twice in the span of just 98 seconds before half-time. And with that, I'll kick it back over to you, Karen.
Well, talk about scoring goals in technology. The latest around Samsung. The company is expected to announce an 18-fold jump in Q2 operating profit to a record high. The South Korean chipmaker is likely to estimate an operating profit of more than $56 billion tomorrow amid a prolonged memory shortage. The world's second largest chipmaker, SK Hynix, is set to launch a US listing on the Nasdaq to raise around $28 billion, according to regulatory filings. The deal is anticipated to be the second largest share sale after the SpaceX IPO last month. The reality is this happens at a time when there are huge concentration risks around these Asian AI names. And what's been happening in that part of the world has been a trade powered by SK Hynix, Samsung and TSMC. So the market is wondering how much more of this can be absorbed. Already we've seen very volatile swings. There have been trading halts on a daily basis in South Korea as these two names make up the lion's share of market share in the Kospi. So we've had authorities apologising recently for allowing too much leverage on the trading of these names. So just how bumpy a landing is this going to be stateside as SK Hynix knocks on the door for investors already holding a chunk of the stock in ETF portfolio. So that's going to be fascinating today. But also same Samsung. The show and tell on the earnings. They are going to have to volunteer that the operating profits are solid, and they're not giving too much of it away to workers as well, that they recently cut a slice of it into big bonuses. So I think there are a lot of questions that these two stocks are going to have to answer this week.
Yeah, I suppose the other thing they need to reassure investors about is that these revenues will continue to tumble in because, the risk is that the hyperscalers that are driving a lot of the demand for the memory chips that are being produced by SK Hynix, if they were using from their cash piles to fund the build-out, the capex for these AI data centers that use the memory chips, they're now turning to raising money through equity markets and through debt. If that then starts to slow down, the build-out of the infrastructure, that means the revenues and what SK Hynix makes from the memory chip sales potentially slows down. And I think what we've seen is that expectations are sky high in this space, that even when these tech firms hit targets, sometimes even if they exceed the consensus estimates, but not close enough to the top end of the range of estimates, the share price comes down. So a really sort of sensitive area, and performance has to be absolutely top notch.
We've seen digestion issues in the space before, and to your point, the 200% we've seen so far year to date in these names makes it very difficult territory to digest. You compare that with the likes of Nvidia, which everybody knows is the chip play around AI. The stock is so far up 3%. 3% year to date. So this is again what you see, recycling away from the AI winners to the AI winners of tomorrow. But we are going to leave you with futures. We've seen some appetite stateside for US tech, but that's all from Ben and myself for today's show. Morning Call is coming right next.